Hello my dear CA final students appearing for May 24 and November 24 exams. So many students have requested me to discuss ICAI MCQs in the Board of Studies portal. So therefore I have taken the MCQs which they have given for the purpose of May 24 exams, and I am just discussing these questions with you. So question number 1, so these questions were taken from there itself. So I just took the scan of that. I instructed my team to take it. So and I will share this in the description below this video, so you can also have a look into that. Question number 1, Aircool Limited, a supplier of air conditioners, is registered under GST in the state of Maharashtra. It has a policy to gift an air conditioner to its employees residing in Gujarat at the end of the financial year in terms of the employment contract. The company installs such air conditioners at the residence of the employees. During the current financial year, the company gifted its employees 150 air conditioners and got the air conditioners installed at the residence of these employees. The total open market value of such air conditioners is 52.5 lakhs excluding GST. The tax rate on such air conditioners is 28%. Compute GST liability. So we have one circular which says that any services by employee to employer, if it is coming under perquisite. So if it is a perquisite, what is a perquisite? If it is specified in the salary offer document, then it will be called as perquisite. So here they gave one clue for that. So as a policy, the company has a policy to gift an air conditioner to its employees residing in Gujarat. So this policy, if you take the view that it is as per the employment agreement, okay, policy means as per employment contract, okay, as per employment contract. If it is as per employment contract, if it is as per employment contract, okay, then it will be coming under perquisite. If it is coming under perquisite, so then it is not a supply, it is excluded from supply. So because employee to employer in the course of employment is excluded from supply, and the option will be nil, answer is nil. And even they have given the answer as schedule 3 of CGST Act, that is employee to employer in the course of employment is the reference that is given. Suppose if this line is not given, as per employment contract you are not taking, if this policy is not given in the question, so then what we would have taken? Even otherwise, if you see 52,50,000 is the total value of the air conditioners and divided by 150 air conditioners, because one employee one air conditioner. So which means 52,50,000 divided by 150 air conditioners, that will come to 35,000. So which does not exceed 50,000. So even then the answer will be nil, it is not a supply. So anyway we can take, but actually here they mean to say policy means it is as per employment contract. If it is as per employment contract, means that will be called as perquisite. So it will be coming under perquisite, okay. So that is the meaning of that statement. It is a perquisite and therefore it is excluded from supply. Then next question, question number 2. James Stewart is a registered under GST in the state of Maharashtra. He sells footwear to his customers locally within the same state. He has been appointed as an agent by Toto Shoes Limited. So Toto Shoes Limited is the principal and James Stewart is the agent. And the principal is located in Karnataka. During the financial year, Toto Shoes Limited sends taxable goods worth 5 crores from its Bengaluru store to James Stewart, who sells such goods for 5 crores by raising invoices using the GSTIN of Toto Shoes Limited. So agent is raising invoice in the name of the principal. Then the agent is not acting on behalf of principal. When the agent is not acting on behalf of the principal, so then between the principal and agent there is no supply, and Mr. James Stewart receives a commission of 60 lakhs from Toto Shoes Private Limited. So now compute the value of supply of Toto Shoes Private Limited and James Stewart. So now Toto Shoes is raising the invoice for 5 crores. So that 5 crores will be taken as a value of Toto Shoes, and James Stewart will get only the commission. So that commission 60 lakhs will be taken as the value. So answer 3, option C will be taken here. Now what if, so the invoice is raised by James Stewart in his name, okay. If invoice is raised by James Stewart, if invoice, so whatever invoice raised by, if invoice is raised by James Stewart in his own name, then what will happen? So then the value of supply. So in case of Toto Shoes Limited, Toto Shoes Private Limited, so between Toto Shoes Private Limited and the agent, it will become supply under 71C. So section 71C, and the value of supply will be as per 29, value under rule 29. What will be taken as a value under rule 29? 90% of the resale price, that will be taken. So what is the resale price here? 5 crores into 90%. So that will be 4.5 crores will be taken, and James Stewart, Mr. James. So what will be the value? The value will be, first they are raising invoice in their own name. So as they are raising invoice in their own name, 5 crores plus commission they get. Whether they are acting as agent on behalf of principal or not acting as agent on behalf of principal, they get a commission of 60 lakhs. So therefore the answer will be 5.6 crores. So we have that also as one of the option here, James Stewart 5.6 crores, but that is not correct answer for this question. Suppose if the question is like if invoice raised by James Stewart in his own name, so this will become the answer. Okay. Then look into the third question. Which of the following transactions does not qualify? So when you are reading the MCQ, be careful as to what is the question. Does not qualify as supply under GST law. Disposal of car without consideration, 71C, and the supplier has not claimed ITC. Yes, it is not a supply. Why it is not a supply? Disposal of business asset on which ITC is availed is becoming supply under 71C. Then a principal makes supplies to his agent who is also registered under GST and situated within the same state, and the invoice for further supply is issued by the agent in his name. So then it will become supply under 71C, principal agent transaction. Head office makes supply of service to its own branch outside the state. In every state, so they will be having a distinct person. So distinct person in the other state, that is a person establishment in the other state, whether registered or not registered, it will become distinct person. So therefore it will become transaction between distinct person, supply 71C. A person imports service without consideration for the purpose of his business from his elder son. Son, whether or not dependent, will be treated living outside India as a, and for the purpose of business is given. So import of services from a related person or other establishment located outside India without consideration in the course or furtherance of business, that will become supply under section 71C. Then question number 4, Paliwal Associates, a firm of chartered accountants registered under GST located in Jaipur, Rajasthan, is providing professional consultancy services to its various clients. It has taken consultancy services for its Jaipur business from another establishment of its firm located in UK. However, no consideration was charged for the same. So a firm of chartered accountants providing professional consultancy services. So they have taken consultancy services for its Jaipur business from another establishment of its firm located in UK. However, no consideration was charged for the same. So import of services without consideration. Such services would have been taxable at 18% had the same received from a local firm. Further, Paliwal Associates would have paid 4 lakhs had it not received the service from its UK establishment. Determine the GST liability. First we need to check, is it a supply? Import of service without consideration from a related person or another establishment. Yes, it is from the another establishment located outside India in the course or furtherance of business. Therefore, it will become supply under section 71C. Once it becomes supply under 71C and it is deemed interstate, import of service is deemed interstate. So as it is deemed interstate, so IGST will be applicable. So therefore, what is the value? 4 lakhs. So we need to determine the value as it is without consideration from a related person or distinct person, value under rule 28. What will be value under rule 28? Open market value. So that open market value will be 4 lakh will be taken. Therefore, IGST. What will be the IGST? 4 lakhs into 18% is the IGST rate here. That will be 72,000. So therefore, answer 1 will be taken. So as per rule 28, we need to determine the value because it is import of service from a distinct person. So that is establishment outside India is a distinct person. So rule 28 is applicable in case of transaction between related parties or between distinct persons. Then question number 5, which of the following is or are not considered as supply under CGST Act? Not considered as supply. Importation of architectural services for rupees 1 lakh, import of service for a consideration. Even though it is for personal purpose, it will become supply. Okay, it will become supply under 71B. Then importation of architectural services free of cost for construction of office used for the purpose of used for business purpose from a related person. So without consideration, related person in the course or furtherance of business, 71C. Import of architectural services free of cost for construction of office used for business purpose from unrelated person. So without consideration, unrelated person will not come. So it is not a supply. So therefore option C is the answer. Then next one, question number 6. Jolly Electronics Private Limited, an authorized dealer of GG Micro Limited, is located and registered under GST in Lucknow, Uttar Pradesh. It has sold the following items to Mr. Rakesh, a consumer: refrigerator, stabilizer, LED television, split AC, stabilizer for AC, total value 1,15,000. Jolly Electronics Private Limited has given a single invoice indicating price of each item separately. Means, so it is not a composite supply. First, it is not a composite supply because it is not naturally bundled. So as it is not naturally bundled, okay, it is not a composite supply. Okay, then won't we apply? Why it is not naturally bundled? Because refrigerator, AC, LED, definitely it is not naturally bundled, and not a single price, not for a single price. Yes or no? Yes, because if you see here each item separately, not for a single price, it is not a mixed supply. So it is neither composite supply nor mixed supply. Then what it will be? It will be individual supplies. When it is individual supplies, we will take respective rate for the respective supply. So it is neither composite nor mixed, and the supply other than composite and mixed, respective rate is applicable for each item. Then question number 7, which of the following is not a supply under CGST Act? Not a supply under CGST Act. Goods supplied free of cost by X and Sons to its agent for further supply to customer at rupees 5,000, for which invoice will be issued by the agent in his own name. So free of cost to its agent. Okay, invoice is issued by the agent in his own name. It will become supply, as agent is acting on behalf of principal. It will become supply under 71C. Importation of accounting services free of cost from a dependent father. Dependent father means it will be coming under related party, but it is for business purpose. That will also become supply under 71C. An expensive watch gifted to an employee for rupees 50,000, exactly 50,000. No other gifts provided to such employee during the entire financial year, not a supply. So because the value of gift does not exceed 50,000, so therefore answer 3. A machinery disposed of free of cost on which ITC has been availed. Disposal of business asset on which ITC availed. So option C is the answer. Then next we have the next chapter. In the next chapter charge, they have given some questions. Messrs. Vishnu Megamart, a store located and registered under GST in Rajasthan, has come out with big discount offer at the time of Diwali on various gift items. In order to attract more customers, it has decided to supply a gift pack containing 5 packets of Jeera Ram's Namkeen and taxable at 12%, 1 packet of roasted smoked almonds taxable at 18%, and Cornville chocolate 28%, Teal fresh juice 18% in a single basket for a single price of 1,000. First of all, it is not naturally bundled. As it is not naturally bundled, it will not become composite supply, but there is a single price. As there is a single price, it will become mixed supply. First you need to check composite supply. It is not a composite supply, but it will be mixed supply. When it is a mixed supply, we need to take the highest rate. So out of this, what is the highest rate? The highest rate will be 28%. So 28% is applicable to all items in this case. So option D is the answer. Which of the following persons can opt for composition scheme under 10(1) in the state of Delhi? Delhi means 150 lakhs is the limit. persons whose aggregate turnover in the preceding financial year did not exceed 75 lakhs, yes, and does not exceed 1.5 crores, yes. Person engaged in manufacture of pan masala, tobacco and tobacco products, no, they cannot. Manufacture of ice cream, edible ice, no, they cannot. Person exclusively engaged in providing restaurant service, yes. 10-1 na, 10-1 restaurant service possible. Engaged exclusively in supply of medicines, yes. So 1, 2, 5, 6. 1, 2, 5, 6 is the answer. So these case only they can go for composition scheme. Then next one, Shri Ram Seva Trust. So actually these MCQs I have given so in my inquest book. So inquest book, on the request of many students, I have made it open for all. Okay. So you have to just go to courses.tharunraj.com. In this courses.tharunraj.com, okay, if you are able, like if you have already purchased it, it's okay. So if you have not purchased it, don't worry. So you just go to this, make a login. Okay. So once you do the login, so if you have an account, you do login, otherwise you create a sign up. So once you enter this and do the sign in, you will be able to see Inquest IDT. So this Inquest IDT you click. So you will be able to see the PDF. Okay. So this contains all the questions. Okay. So chapter wise it is there. Chapter wise it is there. Introduction to GST, taxable event under GST, like all the chapters, including the customs. Okay. FTP, even integrated case studies also is there. So integrated case studies, around some 40 case studies I have included with answers and with explanations for that. Okay. You can see like for example case scenario 1. For that case scenario 1, first question, what is the answer? You can take this up for practice. Okay. So around some 40 case studies I have included and you can make use of it. It is open for all. All you need to just do is that you need to do the sign up and create account, and it is open for all. If you want to buy a book, and you can also buy it from my website, and these questions whatever I am discussing now, these are all incorporated in this book. Okay. So see, look into next question here. Shri Ram Seva Trust, registered under GST, is a charitable institution registered under section 12AB of Income Tax Act. It has organized a skill development program relating to persons over 65 years residing in a metro city in the month of April. It has received the following amounts under the program. Subscription fees for the program 50,000. So basically it's a charitable institution registered under section 12AB or AA, and they are providing skill development program to persons over 65 years residing in a metro city. If they are in rural area, that is exempted. If they are living in a metro city, then whatever money that they are collecting will not be exempted. No exemption in this case, because they are they are providing education services to persons over 65 years not in rural area. Then this will be taxable. Then sponsorship services will be taxable. Consideration for supply of goods will be taxable. So 3 lakhs plus 1 lakh plus 50,000. Besides, the trust has received donation of 2 lakhs in the April from Mehta Builders. Trust is entitled to use this donation for any purpose, means it's an unconditional donation. Hanuman, accountant of Shri Ram Seva Trust, is not able to determine the tax liability. So this is unconditional donation. It is unconditional donation. Unconditional donation, so not treated as consideration. Not treated as consideration or not treated as supply. Okay. So therefore don't take it. Just 50,000, 1 lakh and 3 lakh. 4 lakh 50,000 will be taken as the answer. That will be taken as a value of taxable supply. Then next one. Question number 2. The Resident Welfare Association of Kutumb Housing Society is registered under GST in the state of Maharashtra. There are 100 3 BHK flats and 100 4 BHK flats in the society. It received or paid the following amounts excluding GST wherever applicable in the month of January and February. So actually Resident Welfare Association, if it crosses 7,500 rupees per month per member, then it will be taxable. So if you see here, so maintenance charges per flat received from all 3 BHK owners 7,000. It does not exceed 7,500. Therefore it is exempted. Even for February it will be exempted. maintenance charges per flat received from all 4 BHK owners. If it exceeds 7,500, entirely it will be taxable. Interest received on fixed deposit. So, interest on loans, advances, deposits is exempted for payment of GST. Now, generator purchased for the power backup of 4 BHK flats. Can they take ITC? Yes, they can take ITC on this 1 lakh because this 4 BHK flats outward supply, that is maintenance charges, is taxable. So, they can take ITC with respect to this. Whereas, next one, taps, pipes and other sanitary fittings purchased for 3 BHK flats. As 3 BHK flats outward supply is exempted, they cannot take ITC with respect to this 50,000. And determine the GST liability assuming the rate of GST as 18%. Now, for January month, if you see, so how much taxable? 10,000, and 10,000 per month. They are asking, you know, there are 100 3 BHK and 100 4 BHK. So, 10,000 into 100 into 18% will be the gross liability. Okay. So, that will be how much? 1,80,000 and no ITC. Then for the month of February also same, gross will be same, that is 10,000 into 100 units into 18%, 1,80,000, but ITC they can take. How much is the ITC that they can take? 1 lakh into 18%, 18,000, 18,000. So, 1,80,000 minus 18,000, that is 1,62,000 will be taken. So, 1,80,000. So, what is the answer for this? 1,80,000 and 1,62,000, 1,80,000 and 1,62,000. So, how much it comes to? 1,80,000 and 1,62,000. Option B is the answer. So, this is the answer for this question. Then next one, question number 3. A municipal corporation has invited online bids for maintenance of bus stops for a period of 1 year from 1st January to 31st December. The work involves composite supply of goods and service, wherein the supply of service is the principal supply. So, we have an exemption. Any services provided to government which the government is required to do as per 243G or 243W of the Constitution in relation to the public functions, then if it is a pure service, it is exempted. If it is a composite supply of goods and services where the value of goods does not exceed 25% of the total, then also it will be exempted. And what is the meaning of government? Central government, state government or local authority? Municipal corporation will come under government, okay, local authority, and the value of goods constitutes exactly 25% of the total value of composite supply. Mr. Kumar, Managing Director of Kiladi Contractors Private Limited, located and registered under GST in Gujarat, wants to bid for the same. He seeks your opinion to determine the taxability of above supplies to quote the best price. Actually, the value of goods, okay. So, first it should be a composite supply. First it should be a composite supply where the value of goods does not exceed 25% of total. So, therefore, it is exempted in this case. And here this is an activity which they need to do as per the Constitution, okay, that is what we need to take here. If it is a pure service, then also it will be exempted. Then question number 4, Happy Singh is the lawful owner of a residential house situated in Chandigarh. The property has 4 floors constructed on it. Out of the 4 floors in his house, first and second floor are self-occupied and third and fourth floor have been let out for residential purposes. Ratanjot Singh, who is a tenant on the third floor, has surrendered his tenancy rights to Parminder Singh for a tenancy premium of 5 lakhs on 1st June. So, transfer of tenancy right by a tenant will always be taxable. Here Ratanjot Singh is a tenant, so who is transferring it to Parminder Singh, so that 5 lakhs will be taxable in the hands of Ratanjot Singh, no doubt. Now, Parminder Singh has paid the applicable stamp duty and registration charges on transfer of tenancy right, and moreover Parminder Singh will pay a monthly rent of 50,000 to Happy Singh. He is an unregistered person. Now, it's a what property? Residential property. Now, that 5 lakhs will be taxable, but rent of the property, say renting of residential property for residential purpose to an unregistered individual or unregistered person is exempted. So, therefore, this 50,000, this 5 lakhs will be taxable, whereas this 50,000 will be exempted. Now, the question is, determine the value of taxable supply for Happy Singh it will be exempted. Why? See, Happy Singh is getting the rent na. Actually, Parminder Singh will pay a monthly rent of 50,000 to Happy Singh. Parminder Singh is an unregistered person. So, renting of residential property. Renting of residential property. For what purpose? Residential purpose. So, because it is let out for residential purpose. Okay. And to an unregistered person is exempted. So, what is the answer? Correct answer in this case? The correct answer in this case is Happy Singh will be nil and Ratan Jot Singh will be 5 lakhs. So, this is wrong answer, but ICAI maybe some mistake could be there. They have selected this as the answer. Actually, it is wrong answer. So, renting to a residential property given on rent to a residential purpose to an unregistered unregistered person is exempted. Even registered individual for his family stay is exempted. So, therefore, option B is the correct answer in this case. Then number 5. Which of the following statements are true? Services provided by government ITIs to individual trainees are exempt from GST. Government ITIs will come under approved occasional education. So, this is true. Service provided by state government and private service providers by way of transportation of patient in an ambulance are exempt from GST. True. Service of renting of medical shops in a hospital are exempt. No, false. Because renting is not healthcare services. That will be services provided by police to PSUs. Police to PSUs are taxable. True, we don't have any exemption. It will not come under interdepartmental service. Interdepartmental means one department of central government or state government or another department of central government, state government. PSU is not a government department. So, therefore, it will be coming under business entity. It will be taxable. Okay, true. So, 1, 2 and 4 option A is the correct answer. Then next one. State which of the following statements is incorrect. They are asking which of the following statements are incorrect. Services by any artist by way of performance in folk or classical art form of music, dance or theatre as a brand ambassador if the consideration charged for such performance is not more than 1,50,000 is exempted. So, that is true, it is not incorrect. Okay. So, one second. Not more than. So, here brand ambassador is given. Brand ambassador is not exempt. So, therefore, here it are telling it is exempt. So, incorrect, false. The moment the person, performance artist, brand ambassador, whatever may be the amount, that will be taxable. Service of life insurance and life micro insurance approved by insurance regulatory authority having minimum amount of cover 2 lakhs is exempt. False. It should be maximum 2 lakhs. So, micro life insurance where the maximum sum assured is 2 lakhs is only exempted. Service by an acquiring bank to any person in relation to settlement of an amount up to 2,000. It is not 2,500, it is up to 2,000. False. So, in this case, so brand ambassador no exemption. As a brand ambassador, no exemption. There is no exemption. Okay. Whereas here, so it is maximum 2 lakhs and here it is up to 2,000 in a single transaction. Services provided by goods transport agency by way of transportation of goods where gross amount charged on consignment transport in a single carriage. False, because we don't have that exemption. At present there is no exemption. There is no exemption for single carriage. Okay. So, due to that reason all these statements given here are incorrect. Then question number 7, Devbhoomi Rice Private Limited, a registered person under GST, is providing service of processing of milling of paddy into rice, loading, unloading, packing, storage and warehousing of rice in the state of Chhattisgarh. The company has made following supplies during the tax period of April to September. During the tax period of April to September, loading and unloading of rice. So, rice, in relation to rice, loading, unloading, packing, storage of rice is exempted. Only 4 activities in relation to rice is exempted. Loading, unloading, packing and storage of rice is exempted. But processing, servicing of milling of paddy into rice. See, job work in relation to agricultural produce is exempted. But rice is not an agricultural produce. See the output. Output is what? Paddy to rice, rice is the output. Output is agricultural produce? No. So this process will become taxable. Okay. Therefore, what is the question? Determine the amount of GST payable. So GST payable will be on 1 lakh. What is the rate of GST? 5%. So 1 lakh into 5%, that will be, is it 1 lakh or 1 crore? Actually it is 1 crore, not 1 lakh. 1 crore into 5%, that will be 5 lakhs will be taken as the answer, option 3. And that is option C, first and second will be exempted. Then question number 8. Mr. Kumar is a managing director of Kiladi Equipments Private Limited. The company is located and registered under GST in Mumbai, Maharashtra. Mr. Kumar has decided to send food grains and other relief materials worth rupees 50 lakhs and 20 lakhs through railways and airways respectively to the cyclone hit victims in Kerala. See, actually relief material for natural or man-made disasters is exempted. It is notified goods, and that notified goods is exempted only in case of railways or waterways. So between international, that is coastal waters between place in India or GTA, only 3 cases. But for airlines, we don't have any exemption. For airways, no exemption, but for railways, we have exemption. The company has contacted Super Airlines and Indian Railways for transportation of the materials from Mumbai to Kerala. The cost of transportation for the same has been determined as 10 lakhs and 50,000. 10 lakhs for airlines, 50,000 for railways. Mr. Kumar seeks your help to determine the amount of GST payable in respect of service procured from Super Airlines and Indian Railways if the applicable rate of GST is 18% and the amount given above are exclusive of GST wherever applicable. This 10 lakhs will be taxable, airlines will be taxable. So 10 lakhs into 18%, 1 lakh 80, and this railways 50,000 will be nil, it is exempted. Option 1 is correct. So notified goods. What are the notified goods? There are 6 notified goods. So that 6 notified goods is agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural and man-made disasters, defense and military equipments. These goods transported by GTA is exempted. These goods transported in coastal waters between India, between places in India, or if it is transported by railways. In these 3 modes, if it is transported, it will be exempted. Okay. Then next one. Question number 9. Which of the following activities are not exempt from GST? Religious pilgrimage organized by Thodaramal Charitable Trust. So actually religious pilgrimage not exempt, they are asking. Religious pilgrimage by specified organization. We don't know whether Thodaramal Charitable Trust is a specified organization. Due to that reason, it will be taxable. So religious pilgrimage by a specified organization is only exempted. So services provided by a business facilitator to insurance company in urban area taxable. If it is in rural area, it will be exempted. Then milling of paddy into rice, already we discussed rice is actually not an agricultural produce. So therefore job work in relation to agricultural produce is only exempted. So this will be taxable. So option D, all 3 are not exempted. Then question number 10. Diksha Public School situated in Bilaspur in the state of Chhattisgarh has planned to celebrate its sports day in Bilaspur Stadium located at a distance of 20 kilometers from the school precincts on 15th April. So they want to celebrate its sports day in a stadium. DPS has invited quotes from various suppliers for arranging tent, security and catering for the students and teachers. The price has to be quoted inclusive of applicable taxes. Raman and Co, a supplier of providing the services required above, is not sure of the GST impact on the above transaction. It seeks your help to determine whether GST is applicable on the above service or not. So we have seen this services provided to education institution. In case of service provided to education institution, security and housekeeping services should be within the premises. In this case, the security and housekeeping service is outside the premises of the school, therefore that activity will be taxable. So security and housekeeping will become taxable because it is outside the premises. And first of all, it is to school. School means it is a category 1 education institution. Category 1 educational institution. Even though it is a category 1 education institution, but security and housekeeping services outside the premises. As it is outside the premises, therefore it will be taxable. But For transportation and catering, we don't have any restriction. So that can be anywhere. So catering service, even though it is outside the premises, it will be exempted. So therefore, the answer is option C. Tent and security service taxable and catering services will become exempted. This is not service provided by educational institution. This is services provided to educational institution. Then question number 11. Mr. Happy Singh is a resident of Chandigarh. The marriage of his daughter Kushi Kaur has been finalized with Mr. Lovely Singh, an NRI settled in Canada. The marriage is scheduled on 14 February in Chandigarh. Mr. Happy Singh wants to send 5,000 marriage invitation cards to all his relatives and friends in India to attend the marriage. He has to send the invitation by speed post. In case of Department of Post, so postcard, inland letter, either book post or registered post of envelopes less than 10 grams is exempted. But speed post, express parcel post, life insurance and other activities of Department of Post will be taxable. So he is not sure about the taxability of speed post services. He seeks your help in determining the applicability of GST on speed post. So GST will be payable. It is taxable. We don't have any exemption on that. Then question number 12. Mr. Pandey is an ambulance driver who lives in NCT of Delhi. He provides driving services to Preeti Heart and Lung Institute, a super specialty hospital registered under GST in Delhi for a consideration of 25,000 per month. Pandey was instructed to pick up a patient to PHLA. While going from Delhi to Gurugram, he picked up 5 passengers in the ambulance and charged rupees 500 each. Only transportation of a patient in ambulance is exempted. But apart from the transportation of passengers in an ambulance, it is not exempted, it will be taxable. Okay. So only transportation of patients, okay, is exempted. In this case, it is not transportation of patient, it is passenger. Due to that reason, it will become taxable. The next chapter is place of supply. In this question number 1, Lucky Singh, a resident of Noida and an unregistered person UP working in a private firm, went to Himachal Pradesh for a family vacation via Delhi, Chandigarh, Himachal Pradesh in his own car. After entering Chandigarh, his car broke down due to some technical issue and he called On Roads, an emergency roadside car assistance company, to repair the car. The car was repaired by the staff of On Roads. On Roads does not have the policy to maintain a record of address of the persons taking the car assistance service. The value of supply amounted to 50,000, being labor charges 40 and spares 10. The bill was supposed to be generated online through the server, but due to some technical issue, it was not generated. Determine the place of supply in the given case. What is the service? This is repairs of motor vehicle. Repair of motor vehicle means performance based service in relation to goods, and it is section 12 because On Roads is located in India and even the person Lucky Singh is also located in India, so section 12. So performance based service in relation to goods, section 12, general provision. So we need to take B2B or B2C. It is B2C because he is an unregistered person. And B2C, location of recipient in the records of the supplier, no. So they have the policy of not maintaining any record of the address of the recipient. So which means that location of supplier will be taken. So general provisions we need to determine, and so location of supplier will be taken as a place of supplier. What is the location of supplier here? Where is that supplier? On Roads is located. On Roads is registered in Delhi. So Delhi will be taken as the place of supply. Why location of supplier? As location of recipient not available in the records of supplier due to that reason. Then question number 2, Mr. Javed, an unregistered person residing in Hisar, Haryana, went to Delhi for seeking admission of his child, Mr. Arjun, in CA Intermediate. Mr. Javed got a demand draft generated at ICAI Bank, located and registered under GST in Hyderabad, Uttar Pradesh against cash for depositing the registration fee to the ICAI. Mr. Javed does not have the bank account in ICIDI Bank, and the bank does not have the policy of KYC requirement, name and address or other identity for customers requiring demand draft and not having account with any of its branch. So it is what services? Banking services. The previous one is performance based services in relation to goods. Performance based services performance based services with respect to goods. So performance based service with respect to goods, and the next one is banking services, and previous one is section 12. And now what about this is also section 12, banking services. So banking services section 12, what will be taken as the place of supply? So general provisions, we need to take general provisions. As per general provisions, again, so whether supplier is having the details of the recipient, no. So therefore we will take location of supplier as location of recipient not available in the records, So we will take location of supplier. Where is the supplier located? That bank is located in Uttar Pradesh, so Uttar Pradesh will be taken as a place of supply. Question number 3, Dhoom Furniture Mart, located and registered under GST in the state of Chhattisgarh, sells furniture from its showroom to Messrs. Lucky Dhaba, located and registered under GST in the state of Jharkhand. Lucky Dhaba requested to deliver the furniture to Pyare Lal at Patna. So here Dhoom Furniture is, where is it located? Located in Chhattisgarh. Okay. And where is the other person? Lucky Dhaba. So where is Lucky Dhaba located? Lucky Dhaba is located in Jharkhand. And they wanted it to be delivered to Pyare Lal. Where is that Pyare Lal located? In Bihar. Okay. Dhoom Furniture Mart sends the furniture with proper e-way to Patna through transporter who made the delivery to Pyare Lal, which means Dhoom Furniture will raise bill to Lucky Dhaba Jharkhand, and they are doing ship to Pyare Lal Bihar. Determine the place of supply of furniture sold by Dhoom Furniture to Lucky Dhaba. So in case of bill to ship to transactions, section 10(1)(b), what will be taken as the place of supply? The place of supply will be taken as billing address. So what is the billing address? The billing address is Jharkhand. So Jharkhand will be taken as the place of supply in this case. Then next, suppose if they ask what is the place of supply in case of supply made by Lucky Dhaba to Pyare Lal, then that will be supply involving movement of goods, 10(1)(a), ending point. So Bihar will be taken in that case. Then next, question number 4. Messrs. Buildwell Engineering Consultants, located and registered under GST in Gurugram, Haryana, provided architectural services to Taj India Limited, located and registered under GST in Mumbai, Maharashtra, for its hotel to be constructed on a land situated in Dubai. So here it is what services? So service in relation to immobile property. Service in relation to immobile property, section 12 or section 13. Services in relation to immovable property. So whether we need to determine as per 12 or 13. Where is the supplier located? Located in Gurugram, Haryana, and they provide architectural services to Taj in Mumbai, Maharashtra. So section 12. Whether the property in India or property outside India? Property outside India. So property outside India. When the property is outside India, what will be taken as the place of supply? The place of supply will be location of recipient. What is the location of recipient? Maharashtra, Mumbai, Maharashtra will be taken. What if the property is in India? Location of the property will be taken. Then next one, question number 5. Aflatun Spares Private Limited, located and registered under GST in Haryana, supplied spare parts FOB basis to Mr. Lakshmi Kurana, an unregistered person located in Rajasthan. Mr. Lakshmi Kurana booked the courier himself with Black Dot Courier Private Limited, registered under GST in Delhi for delivery in Rajasthan. Black Dot Courier Private Limited picked up the goods from Haryana, handed over by Aflatun Spares Private Limited, and delivered the courier in Rajasthan while passing through the state of Uttar Pradesh. What is this particular service? Transportation of goods. In case of transportation of goods, we have an amendment. Now, so what does it say for May 24 example? What is the amendment? So transportation of goods, we need to see B2B or B2C. B2B, location of recipient. So here Aflatun Spares. So who is the supplier? Black Dot Courier is the supplier, and who is the recipient? Aflatun Spares is the recipient. Unregistered in Haryana, supplied spare parts to Lakshmi Kurana, an unregistered person. Lakshmi Kurana has booked. So means it's a B2C supply. B2C supply. In case of B2C supply, we need to take starting point as the place of supply. Starting point will be taken because who is booking? So booking is by Lakshmi Kunana, so means it is B2C. And what is the starting point from where they are picking up? They are picking up from Haryana, so Haryana will be taken as the place of supply. Then next we have time of supply. Radhika Travels Private Limited purchased a bus chassis from Jyoti Motors Limited for a consideration of 80 lakhs on 1st August. And Radhika Travels Private Limited sent the bus chassis for bodybuilding to Messrs Hanumant Fabricators and paid in advance the total consideration of 25 lakhs received by Hanumant Fabricators on 10th August. Hanumant Fabricators, after completing the bus body, informed the Radhika Travels Private Limited for inspection of the work done on 1st September, and they visited the workshop and confirmed the bus body was in accordance with the terms of the contract. They raised the invoice for 25 lakhs on 15th September and supplied chassis along with bus body so constructed along with the invoice on 16th September. State the time of supply in this case for supply made by Hanumant Fabricators out of the choice given below. So this bus body building will be determined based on principal supply as per CBIC circular. So this bus body building will come under supply of services, because what is the principal supply here? Services. So therefore it will be treated as supply of services. In case of supply of services, we need to determine time of supply under section 13, and here it is like FCM, services covered under FCM. So whether the service is like what is the date of completion of service, and when the invoice is raised, you need to see what is the date of completion of service. Here the service was completed, so Radhika visited the workshop and completing the bus body informed Radhika Travels for inspection on 1st September. So 1st September is the completion. What is the date of invoice? Date of invoice is 15th September. So invoice is within 30 days. As the invoice is within 30 days, so the time of supply will be date of invoice or date of payment, whichever is earlier will be taken. Okay. So what is the date of invoice? Date of invoice is 15/9, or date of payment. What is the date of payment? So Hanumant Fabricators paid in advance the total consideration of 25 lakhs received by Hanumant Fabricators on 10th August. Okay. So actually what happened here? So Radhika Travels Private Limited sent the bus chassis for bus body building to Hanumant Fabricators and paid an advance of 25 lakhs on 10th August. So what is the date of payment? 10th August. So whichever is earlier, so which is the earlier date, 10th August will be taken as the answer. So 1 on option A is the answer. So actually circular is also connected here. So it's a very good question. Then next question, Banke Bihari Pedewala owns a famous sweet shop located and registered under GST in Mathura, Uttar Pradesh. He received an order for 200 kgs of sweets on 2nd May from Gumogam Travels Private Limited located in the same locality of Madura and registered under GST for a total consideration of 1 lakh. Complete order of sweets was delivered to Gumogam Travels on 5th May but without invoice, as accountant of Banke Bihari was on leave that day. However, the invoice was raised for the same on 6th May. When the accountant joined the office after leave, payment was made on 7th May. So it is supply of goods. In case of supply of goods, the time of supply is determined under section 12. As per section 12, what will be taken as a time of supply? So due date of invoice or actual date of invoice, whichever is earlier. So time of supply will be due date of invoice or actual date of invoice, whichever is earlier. What will be the due date of invoice? So here supply involves movement of goods at the time of removal, because so received an order for 200 kgs, complete order was delivered on 5th May. So 5th May will be taken as the due date of invoice. Actual date of invoice was on 6th May. Okay. So therefore 6th May, whichever is earlier, so 5th May or 6th May, whichever is earlier, 5th May will be taken as the answer here. So this is because of section 12 read with one notification. What is that notification? Notification number 66 of 2017. Then next one, chapter 6, value of supply. Mr. Alauddin, a stationery retailer located and registered under GST in Allahabad, has received order for supply of goods worth rupees 2 lakhs before any discount on 12th November from another local registered dealer, Mr. Jalaluddin. So, supply of goods worth rupees 2 lakhs, okay, and before any discount. Goods were supplied under the cover of a tax invoice. Alauddin incurred the following additional expenses. So, 2 lakhs will be taken as the transaction value. And packing charges, freight and cartage, handling charges, these were additional. So, as per 15.2c, these expenses are to be included because these are incurred before or at the time of delivery of goods, and it is not included in the above value. So, therefore, we need to add. So, how much? 3, 4, 5, 6, 7,000 rupees. Then, Mr. Jalaluddin made full payment. So, including the additional amount charged by Alauddin and delivery of the goods, for which he was allowed instant cash discount of rupees 2,000. So, 2,000 is a pre-supply discount because it was given instant cash discount at the time of delivery of the goods, before supply, before at the time of supply. The applicable rate of GST on goods supplied are IGST 18%, CGST, SGST, and the amounts given above are exclusive of GST. So, where is this Alauddin stationery dealer located? Allahabad. And local registered dealer. Local registered dealer means what? CGST, SGST. So, what will be taken as the value? 2,05,000 will be taken as the value, okay. And Alauddin paid already 18,000 and 18,000. Now, 2,05,000 into 9%. So, CGST, SGST, okay. So, here if you see CGST and SGST, so 2,07,000 minus 2,000. Once again, Jalaluddin made full payment on delivery of goods for which he was allowed an instant discount of 2,000. So, actually here what happened is that, so nowhere it is given whether the discount is given before or at the time of supply, okay. So, it is mentioned that the discount is given that the discount is given on delivery which was allowed. So, it is nowhere given as before at the time of supply. So, this discount cannot be allowed as deduction. Why this cannot be allowed as deduction? Because nowhere it is clearly specified. They are telling on delivery, but whether it is before at the time of supply not given, and the terms are also not agreed before the time of supply. So, 2,07,000 only will be taken, and the CGST will be 18,630 and the SGST will be 18,630. So, therefore, already 18,000 paid. So, option A. Sir, suppose if we take the assumption that at the time of delivery only they raise the invoice, at the time of delivery only they raise the invoice, that is they are delivering on 12th November na, on the date only they raised the invoice and they got the discount, they gave an instant discount, then in that case the 2,000 will be allowed as reduction and the answer would have been 450 and 450. So, here it is loosely drafted, okay. So, on delivery of goods for which he was allowed an instant full payment on delivery. So, whether it is before at the time of supply not given, so it is assumed that it is after supply, post supply discount, okay. So, it is assumed as post supply discount, okay. So, that is what they have taken because it is not given. So, this is where sometimes so ICAI will take some view, but actually we will think generally it is before the time of supply. So, therefore, it is allowed as reduction and 450 would have taken as the answer, but ICAI will take some other assumption. So, this is the problem where we will be unnecessarily losing the marks in subjects like taxation and MCQs and all. So, when it is descriptive, what happens, we will be able to write the note, but in MCQs we can't do anything with respect to that. So, this is where seriously ICAI should be careful while drafting the MCQs. Then next one, input tax credit. Number 1, Mr. Chamcham, registered under GST in Delhi, is a domestic trader as also an exporter of wholesale goods. His annual turnover and input tax credit details are as follows. Turnover, tax paid on inputs, taxable goods 90 lakhs and tax paid on inputs 9 lakhs, exempted goods 10 lakhs, and for making exempted goods they purchase some inputs, tax paid 1 lakh, exported goods 15 lakhs and the tax paid on inputs 2 lakhs. No GST payable on export of goods and exempted goods. Means you are going for export without payment of GST. Mr. Chamcham seeks your expert help in calculating the amount of ITC which is eligible to claim under GST law. They are not asking refund. Be careful. They are not asking refund. They are asking how much ITC is admissible. So, when the outward supply is taxable, we can take ITC on inward supply. When the outward supply is exempted, we cannot take ITC on inward supply. When the outward supply is zero rated, whether you pay GST or don't pay GST, you can take ITC on inward supply. So, 9 lakhs plus 2 lakhs, 9 plus 2, 11 lakhs will be taken as the answer. They are not asking about, input tax credit refund. Suppose in the same question, if they ask what is the refund, same question, what is the refund? What is the refund of ITC? That also can be tested here. What is the refund of ITC? Then what we will do, net ITC 11 lakhs into zero rated turnover. What is the zero rated turnover? 15 divided by adjusted total turnover. So 90 plus 15, 90 plus 15, 105. Okay, 10 we should not take in the adjusted total turnover. So 11 lakhs into 15 divided by zero rated, exported is only 15 na, divided by 105. So that will be 1,57,143 will be taken as the ITC. But sir, clearly we know how much of the input is used in export, how much is used in taxable. So can't we get that exactly? No. So refund of ITC is always based on a formula, net ITC into zero rated turnover divided by adjusted turnover, due to that reason. Then next question number 2, which of the following statements is false? ITC on works contract service availed by a software company for construction of its office is blocked ITC. So yes, works contract service is blocked ITC, that is true. ITC on works contract service availed by a manufacturing company for construction of pipelines outside the factory. Usually pipelines outside the factory will not come under plant and machinery, so it is block credit, true. ITC on goods and service used by an automobile company for construction of a foundation on which machinery is to be mounted permanently is allowed, true, because plant and machinery. So works contract or any material purchase for construction of plant and machinery, ITC is available. ITC on works contract service availed by a consulting firm for repair of office building is blocked provided the company has booked such expenditure in P&L, false. Actually when they book the expenditure in P&L, it is not blocked, they can take ITC. So option D is the answer. Under which of the following situations input tax credit will be available under GST law? Cars purchased by a manufacturing company for official use of its employees, no, they cannot take ITC. So there is no ITC because cars, motor vehicles capacity does not exceed 13 and it is not covered under exception, so ITC not available. Aircraft purchased by a manufacturing company for official use, no. So aircraft also not covered under the exceptions. General insurance taken on car used by employees of manufacturing company. Car purchased by a company for its official use cannot take ITC, as they cannot take ITC on the car purchase. Even for the car insurance service or repair and maintenance service also they cannot take ITC. Maintenance and repair service available by a company for a truck. Generally truck purchased is eligible for ITC, as truck purchased is eligible for ITC because it will come under other motor vehicles. So the 4 service, repair and maintenance, hiring, renting and leasing of the truck, or general insurance services or authorized service center service in relation to truck is eligible for ITC. They are asking which of the cases ITC available? Option D. Then next one, registration, chapter 8. Mr. Manjot is a trader supplying goods from his firm, Messrs. Singh Traders. The office of the firm is located in Delhi, whereas its godown are located in the state of Uttar Pradesh, Punjab, Jammu and Kashmir respectively. Messrs. Singh Traders made following intra-state supplies from different states during the current financial year. So Delhi, Punjab, Uttar Pradesh, Jammu and Kashmir. So they are doing business in more than one state, and in all the states, they are engaged in supply of goods, and none of the state is in MMTN use stamp. Manipur, Mizoram, Tripura, Nagaland, then Sikkim, okay, use stamp. Uttarakhand, okay, MMTN, Manipur, Mizoram, Tripura, Nagaland, it is not there. Use stamp, in the use stamp, U for Uttarakhand, it is not Uttarakhand, it is Uttar Pradesh. Yes, Sikkim, T Telangana, A Arunachal Pradesh, M Meghalaya and P Puducherry. None of these states is in this list, and they are exclusively engaged in supply of goods. So what is the applicable threshold limit? The applicable threshold limit will be, the applicable threshold is 40 lakhs. The applicable threshold is 40 lakhs. And 21, everything you take in aggregate turnover, 21 lakhs plus 6 lakhs plus 3 lakhs taxable plus 3 lakhs exempted, 3 lakhs each. Then 8 lakhs, then 3 lakhs. So therefore it is more than 40 lakhs. So 21 lakhs plus 6 lakhs, 28, okay, 21 plus 6, then 3 plus 3, 6, that itself is 33 plus 8 plus 3. So 44. So aggregate turnover is 44 lakhs. Therefore, Manjot is liable to register. Mr. Manjot is liable to register. Where they need to register? They need to register in every state from where they make taxable supplies. Where are they making taxable supplies? Delhi they are making taxable supplies. So they need to register. Again, Uttar Pradesh they are making taxable supply. Jammu and Kashmir also they are making taxable supply. So Delhi, Uttar Pradesh and Jammu and Kashmir, but they are not required to get registered in Punjab because they are making only exempted supplies in Punjab. Then question number 2, state which of the following statements is incorrect. An agent supplying taxable goods on behalf of principal, supplying goods on behalf of principal, where invoice is issued in the name of the principal, invoice is issued in the name of the principal, is required to get compulsorily registered under GST, false. So they are not required to. Only an agent acting on behalf of principal. When the agent will be acting on behalf of principal, if the invoice is raised by the agent in his name, here the invoice is issued in the name of the principal, so agent is not acting on behalf of principal, so therefore they are not required to compulsorily get registered. Persons who are required to deduct TDS, whether or not separately registered under GST, are compulsorily required to get registered under GST law without any threshold limit. True. So TDS deductor is required to get registered. Every person supplying OIDR services from a place outside India to a registered person in India is compulsorily required to get registered under GST law without any threshold limit. False. So only when they are making supply to non-taxable online recipient in India, then the liability is on the supplier outside India and they need to register. Okay. Then persons who supply services other than supply specified under 9.5 through e-commerce operator are compulsorily required to get registered. False. Only supplier of goods through e-commerce operator, that too if they are making intrastate supplies, they are not compulsorily required to get registered. So the person who is making interstate supplies of goods through e-commerce operator is only compulsorily required to get registered. So therefore 1, 3 and 4 is incorrect statements. They are asking which of the following is incorrect. Then next one, Shah BD Company Private Limited is a manufacturer of cigarettes. It has been registered under GST in the state of West Bengal. The turnover of the company from the current financial year is 90 lakhs. The excise duty paid on the cigarettes removed is rupees 10 lakhs. CGST, SGST paid on cigarettes is 18 lakhs, which was charged separately in invoices. The company has also recovered actual freight of 5 lakhs from the buyer on supply of cigarettes so made during the financial year and also charged CGST, SGST thereon. The company paid tax at the rate of 5% under RCM while availing the service of GTA of 5 lakhs. Compute the aggregate turnover first. So what is the turnover? 90 lakhs. So 90 lakhs you take. Excise duty. So old indirect taxes, all taxes, duties and cess by whatever name called other than GST should be included in the value. Naturally, this 10 lakhs also should come, but GST should not come in aggregate turnover. Aggregate turnover do not include GST. And company also recovered actual freight from the buyers, 5 lakhs. So 5 lakhs actual freight, so that should be taken, okay, on supply of cigarettes made during the financial year. And company paid tax at 5% reverse charge while availing service of GTA. So GST paid, like inward supplies under RCM will not be coming. So 90 plus 10 plus 5. So 90 lakhs regular turnover, 10 lakhs excise duty, 5 lakhs is actual freight. So 105 lakhs will be taken as the aggregate turnover. And again I am telling why 18 lakhs should not be taken. CGST, SGST should not come in aggregate turnover. Inward supplies also will not come in aggregate turnover even though you are required to pay GST under RCM. So the next chapter, chapter 9. Which of the following statements is incorrect while issuing a tax invoice? Place of supply in case of interstate supply is not required to be mentioned. So false. It is to be mentioned. Okay. then a registered person whose aggregate turnover is greater than 5 crores in the preceding financial year is not required to mention greater than 5 crores, not required to mention HSN code for goods or services supplied by it to an unregistered person. False. They need to mention. So for B2B or B2C, they need to mention 6 digits. Quantity is not required to be mentioned in case of goods when the goods are sold on as is, where is basis. No, they have to mention the quantity. Then description of goods is not required to be given in case of mixed supply of goods. False. Always they need to give description, and basically the description is nothing but that supply having the highest rate, that description needs to be given. So therefore option C, all these cases are incorrect statements. Then next, question number 2, ASC, a registered person under GST, supplied goods amounting to 1,18,000 inclusive of GST, taxable at 18% to BSC, a registered person on 30th September. BSC further sold that goods to Rakesh, a consumer who came to his shop on 30th October in cash for 2,36,000 inclusive of GST. ASC issued a credit note of 11,800 for rate difference on 2nd November. So when the invoice is raised 30th September, 2nd November, thereafter BSC entered the credit note in the books for the same amount in the name of Rakesh without intimating him and providing any refund of the sum paid on 2nd November and reduced its output tax liability. As per the provisions of GST law, which of the above mentioned suppliers are allowed to reduce their output tax liability? So ASC Limited, ASC issued a credit note to whom? To BSC. BSC entered the credit note, but they did not inform the Rakesh. So BSC cannot allow the liability to be reduced. See, credit note, the liability gets reduced only when you pass on the benefit to the recipient by way of refunding full amount. Here ASC gave full refund to BSC, but BSC did not give it to Rakesh. So only ASC can issue the credit note, and that will lead to reduction in liability. Okay, but BSC it is not possible. Then next, question number 3. What will be the rate of tax and nature of supply of service if the same is not determinable at the time of receipt of advance? At the time of receipt of advance, if you don't know what is the nature of supply, it will be deemed to be interstate supply, and the rate of GST will be 18%. Deemed to be interstate, rate of GST 18%. Then the next, chapter 11, payment of tax, TDS, TCS. So question number 1, in which of the following supply of goods and services made exclusively to government departments, agencies, etc. and persons notified under section 51, TDS is required to be deducted? The amounts given below are inclusive of GST wherever applicable. Assume that all other conditions are fulfilled. Health department executed a contract with local supplier registered to GST to supply medical grade oxygen of 2.6 lakhs and is making full payment. So excluding GST, how much is the contract value? 2,60,000 into 100 divided by 118. So 2,60,000 into 100 divided by 118 is 2,20,339. It does not exceed. So 2,50,000. So therefore no TDS. No TDS in this case. Then government school is making a payment of 3.5 lakhs to register supplier for supply of cooked food as midday meal scheme sponsored by central government. So catering services to category 1 institution is exempted. So as there is no taxable supply, there is no TDS. So TDS is applicable only when there is a taxable supply. So catering services to category 1 education institution is exempted. Then Municipal Corporation of Kolkata purchase a heavy generator from a registered supplier in New Delhi. Now it is making a payment of 5 lakhs for such purchase. 5 lakhs, definitely the contract value exceeds 2,50,000. So TDS is applicable. Finance department in Delhi is making a payment of 3 lakhs to registered supplier of printing and stationery. So 3 lakhs, if you take excluding GST into 100 by 118, that is more than 2,50,000, 2,54,000, more than 2,50,000. So TDS is applicable. So third case and fourth case only TDS is applicable. In other cases TDS is not applicable. Also in the third case and fourth case, one more point you need to check. The place of supply and the location of recipient should be same state. Here sale of generator. So delivery point is what? Delivery point is Kolkata and recipient also Kolkata. so TDS applicable. Next case, printing and stationery. So again, so ending point, so this is making payment for printing and stationery services. So general provisions, place of supply will be location of recipient and recipient is also in Delhi, so TDS will be applicable, no restriction. Otherwise, if the place of supply and location of recipient is not in the same state and if it is an intrastate supply, TDS is not applicable. Then the next chapter that we have is on returns. Mr. Prabhu, registered under GST in Mumbai, is in the business of trading of marble handicraft items domestically as also exporting the same. His annual turnover and input tax details are as follows: taxable goods, exported goods, exempted goods, tax paid on inputs. Mr. Prabhu exported the goods under LUT without payment of GST. Value of like kind goods supplied in the domestic market is 60 lakhs. Mr. Prabhu seeks your help in calculating the amount of refund of ITC. What is the formula for refund of ITC? Net ITC into zero rated divided by adjusted total turnover. Now, what should be taken as the net ITC? So here, as the outward supply is taxable, we can take ITC. As the outward supply is exported, we can take ITC. As the outward supply is exempted, we cannot take ITC. So the net ITC will be 12 lakh 50 plus 5 lakh 50, that will be 18 lakhs is the net ITC, into zero rated. What will be zero rated? That is export, 75 lakhs. But we need to compare it with 1.5 times the local value, domestic value, like kind and quality. So 60 lakhs into 1.5 will be 90 lakhs. 90 lakhs or 75 lakhs, whichever is lower, 75 lakhs only will be taken. Adjusted total, don't take exempted in adjusted total, take only 1 crore 25 lakhs plus 75 lakhs, that will be 200 lakhs you take. Now how much it will come to? So 18 lakhs into 75 divided by 200, that will be 6 lakhs 75,000 will be taken as the refund of ITC. It is subject to balance in ITC, but we don't have balance in ITC, so that much amount is the eligible amount of refund of ITC. Then next, which of the following services does not qualify as OIDR service? What is a OIDR service? Any service which is now mediated through internet is called as OIDR services, and it includes electronic services, many electronic services. PDF document manually emailed by the provider. Actually now, because of the amended definition, when it is emailed, so it requires internet. So even though it is manually done, previously automated only will be OIDR, but now because of the amended definition of OIDR service, any service which is mediated through internet is OIDR. So it is OIDR, it qualifies for OIDR. Automatically download also OIDR. Online course consisting of pre-recorded videos OIDR. Stock photographs available for automatic download OIDR. Now everything will be coming under OIDR service only. So this question is wrong question. So based on amended definition, any service through internet, any service mediated through internet, will be coming under OIDR services. Then next one. Question number 2. Fury Limited, India has received an order for supply of services amounting to $5 lakh from a US based client. So they got an order for supply of service $5 lakh. Fury Limited India is unable to supply the entire service from India and asked NIC Incorporation Mexico, who is not an establishment of Fury Limited, to supply part of the service, that is 40% of the total contract value. And Fury Limited raised invoice for 5 lakh, but US client paid only 3 lakhs because 40% is provided by another person na. And Fury Limited paid 2 lakhs directly to NIC Incorporation Mexico, which is approved by special order of RBI. Fury Limited also paid IGST 18% on the service imported. So this $2 lakh will be treated as import of service. If on $2 lakh, why $2 lakh is treated as import of service? Simple. Where is NIC located? Outside India. Where is Fury Limited located? India. So which means it's a import of service. Supplier outside India, recipient in India, and place of supply in India, it's a import of service. If on $2 lakh as import of service, IGST is paid, then $5 lakh entire amount, even though they received actually $3 lakh, entire $5 lakh will be treated as export of service as per CBIC circular. So because of that reason, $5 lakh will be taken as the value of export of service. Then next, question number 3, Sukhmani traders registered in Maharashtra purchased machinery 2 years back worth 2 crores and did not avail ITC on the said machinery at the time of its purchase. After using the machinery for 2 years, it gave the said machinery free of cost in the month of September to an unrelated person in Punjab. So it is not a supply. On the date of transfer, open market value of the machinery was 125 and WDV was 153. In the month of September, it also supplied taxable goods worth rupees 50 lakhs to Royal Oil Corporation. Actually, this machinery sales is there na, so that machinery sales will not be coming under supply. It's not a supply. So sale of machinery, not a supply, because they are giving it free of cost. See there, it gave it free of cost, on which ITC not avail, and even it is to an unrelated person. It is given, so at the time given free of cost to an unrelated person. So 71C will not come. Now next one, in the month of September, it also supplied taxable goods worth 50 lakhs to Royal Oil Corporation in the territorial waters. The said territorial waters was located at a distance of 5 nautical miles from the baseline of state of Maharashtra and 7 nautical miles from the baseline of state of Kerala. So whenever the supply takes place in the territorial waters, the nearest coastal state is place of supply. Supply in territorial waters. Whenever supply takes place in territorial waters. Actually, this point is tested in the latest RTP also, May 24 RTP. Supply in territorial waters, nearest coastal line is nearest coastal line state is place of supply. So which is the nearest coastal line? 5 nautical miles from the state of Maharashtra. So place of supply is Maharashtra. All the above amounts are exclusive of GST. Where is the location of supplier? Location of supplier Maharashtra, place of supply Maharashtra. It will be intra chargeable to CGST, SGST. So what is the value? So 50 lakhs and rate of GST 9%. So 50 lakhs CGST, 50 lakhs into 9%, 4,50,000, and SGST also same, 50 lakhs into 9%, that is 4,50,000 will be taken. So option A is the answer. Then the next chapter 15, refunds. Messrs. Raman Plastics is a manufacturer of plastic toys. It is registered under GST in Shimla, Himachal Pradesh. It furnishes the return on monthly basis. It procures raw material from Punjab. During the month of April, it purchased material of 35 lakhs and paid IGST thereon amounting to 6.3 lakhs. It supplied 30% of its production in the state of Jammu and Kashmir, whereas 70% of the production was supplied taxable at 0.1% to merchant exporter during the month of April. The returns for the month of April were duly filed in time within the due date 20th May. The last date up to which taxpayer can claim refund of ITC on account of inverted tax structure. So in case of refund of ITC on account of inverted tax structure, so what is the time limit for making refund application? 2 years from relevant date. 2 years from relevant date. What is the relevant date? The relevant date in case refund of unutilized ITC is the due date of return. So refund of ITC, due relevant date in case of refund of unutilized ITC. Refund of unutilized ITC on account of inverted tax structure, okay, is the due date of 3B. What is the due date of GSTR 3B? GSTR 3B due date is 20th May. So 20th May 2021 plus 2 years will be 20th May 2023. Option B is the answer. Whereas in case of deemed exports, it is the actual date of filing 3B, not due date of filing 3B, opposite. For D, it's not due date, actual date. Refund of ITC on account of inverted tax structure, it will be due date of 3B. While discussing rocket revision, I stressed this point and in MCQ it will be tested, that is this. Then next, state whether the following statements are true or false. Zero rated supply means supply of goods or service or both which attracts nil rate of tax. No, false. So first one is false. So because it does not mean it is nil rated, zero rated means export of goods or services, supply of goods or services to SEZ. Exempt supply means export of goods or service, that is also false. Then non-taxable supply means supply of goods or service which is not leviable to tax under CGST but leviable to IGST, false, not leviable to tax, any tax. ITC may be available for making zero rated supply of exempted goods, yes, true, because exempted goods, the moment it is exported it will become zero rated. Even though exempted goods in outward supply we cannot take ITC, but the moment exempted goods are exported it will become zero rated, so we can take ITC on our inward supply, that's true. So answer 1, option A is the correct answer. Let's move on to the next chapter, chapter 16, job work. Question number 1, Lexcorp Private Limited is a manufacturer of fruit juices registered under GST. It purchases plastic bottles and cardboard and send the same for affixing stickers on plastic bottles and manufacturing boxes from cardboards to a registered job worker. Here Lexcorp is the principal and Hammer Industries Private Limited is the job worker. These raw materials are sent directly from the place of business of the supplier to the premise of the job worker. Usually when the goods are sent on job work, the processed goods should be returned back to the principal's place within 1 year, and it can be extended for a further period of 1 year. And this 1 year should be counted from the date it is dispatched to the job worker by the principal. But if the goods are directly sent to the job worker's place from the supplier's place, the principal's supplier's place, then the date of receipt by the job worker till the date the goods are returned by the job worker, it should be within 1 year. In this case, the goods are sent directly from the place of business of the supplier of Lexcorp to job worker Hammer Industries. So the date on which it is received by the Hammer Industries till the date it is dispatched back by the Hammer Industries, that time limit should be 1 year. What will happen if the goods are not returned within 1 year? On expiry of 1 year, it is treated as sale in the hands of the principal, that is Lexcorp. In the hands of Lexcorp, it is treated as supply, and that amount will be payable now, and we have to even pay the interest also at the rate of 18% because there is a delay in payment of tax. The time of supply is at the time of dispatch to the job worker or received by the job worker. So in this case, business of supplier to the premise of job worker, Lexcorp Private Limited booked the input tax credit on purchase of such items. The following transactions took place in this regard: value of goods, input tax paid on such goods, date of purchase of goods by Lexcorp Private Limited, date of receipt of goods by Hammer Industries, and date of goods received back from Hammer Industries. So first case, if you see, what is the date on which it is received by the Hammer Industries? 15/7. What is the date on which goods are received back from Hammer Industries? 12/7. Is it within 1 year or beyond 1 year? Definitely it is within 1 year. As it is within 1 year, we don't have to add it to the liability. So whereas the next case, if you see, next case 24,000, 27/9/2021 to 13/10/2022. Is it within 1 year or beyond 1 year? Beyond 1 year. So we need to add it to the liability. Then next one, 25/12 to 16/8. Within 1 year or beyond 1 year? This is 2023, beyond 1 year. 25/1/2022 to 23/1/2023, within 1 year. So no need to add. 26/2 to 28/2, beyond 1 year. So we need to add it to liability. So 24,000, 96,000 and 42,000. It will be 1,62,000. And what is the total amount added to the liability of Lexcorp in case of violation of section 143? So these provisions are given in section 19, read with section 143. Section 143. So therefore, on the date it is dispatched to the job worker or received by the job worker, it is treated as supply, and this much amount is added to the liability of Lexcorp along with interest 18%. So option D is the answer for this. Then the next one, assessment and audit. In this chapter, the first question, in respect of consignment supplied on 2nd August, provisional assessment was resorted to by a person who files return on monthly basis. The assessment was finalized on 20th November and the taxpayer became liable to pay differential IGST of 10,000. The taxpayer paid this amount on 20th December. So in case the provisional assessment gets finalized, on the differential amount we need to pay interest from the due date till the actual date of payment. What is the due date of the month for which we resorted to provisional assessment? Consignment is supplied on 20th August. For August, what is the due date? 20th September. Till the date, so the finalization of assessment is irrelevant. Till the date they are making the payment of differential amount. When are they making payment of differential amount? 20th December. So September, don't count 20th. So 10 days in September, 31 days in October, 30 days in November, 20 days in December. So 91 days. 91 days is the period for which interest is payable. Then question number 2, Reena Banerjee and Associates is engaged in retail business of selling mobile phones in the state of West Bengal. It factored supplies to the customers in the state of Uttar Pradesh and Haryana, interstate supplies. So Reena Banerjee and Associates is in West Bengal. They are making supplies in Uttar Pradesh and Haryana, means it's an interstate supply. Interstate supply compulsory registration under section 24. Its total turnover during the current financial year is 18 lakhs. Owing to low profit margin, she has decided to shut down the business in the next financial year. So irrespective of the threshold limit, Reena Banerjee Associates is liable to get registered. The proper officer has collected evidence of interstate sales of mobile phones affected by Reena Banerjee and Associates during the current financial year. Now the proper officer wants to make assessment as if it was liable for registration, but it did not get itself registered under GST. So therefore, in this case, it is assessment of unregistered person, a person liable to get registered but not got registered. There is a best judgment assessment. That best judgment assessment is done under section 63. So option C. There is one more best judgment assessment that is under section 62. That is assessment with respect to non-filers of return, but that is not applicable in this case. Then the next one is chapter 18, inspection, search, seizure, arrest. For which of the following acts done by a taxable person, inspection can be ordered under GST law? Suppression of any transaction, suppression of stock, contravention of any provision to evade. All these three cases, inspection can be ordered under section 67. So by the proper officer. But actually 68 is wrong here, because 68 is only inspection during the transit. Section 61 only inspection in premises. Inspection in premises. Whereas section 68 is inspection during transit. Inspection during transit. Okay. So therefore, section 68 is not correct. Section 67 should be the reference that they should have given. Then next, question number 2. During access to any business premises under section 71, there is access to business premises, but that is not inspection. Randomly, so the officer will be accessing the business premises. Which of the following records can be inspected by the officers? Not only by the officers, by chartered accountant. That is, audit party deputed under section 66, special audit. Trial balance, yes. Statement of financial records, yes. Cost audit, income tax audit report, even records which are maintained under section 35, that can also be verified. And all these cases, okay. And the difference between section 71 versus section 67 is that, so this is random. This is random. There is no intention. But this is, there is reasons to believe evasion. Reasons to believe evasion of tax. Okay. So then only it will be section 67. This requires a order, inspection warrant, search warrant. But 71 is like normal access to business premises randomly by officer. To check evasion. So they will be doing this. Okay. That is the difference between these two sections. Then next one. Chapter 19, demand and recovery. Time limit for issuance of show cause notice under GST law in case any amount collected as tax but not paid to the central government is. So this is like, we don't know whether it is 73 or 74, but it is any amount collected as tax. It's not tax collected but not paid. It is any amount collected as tax, any amount collected by representing as tax. Actually, it is section 76, neither 73 nor 74, it is 76. So, time limit for issuance of show cause notice in case any amount collected as tax. So, there is no time limit for this. Answer option C, there is no time limit. It's not 73 subsection 11. Maybe one student would have given the answers for this. One student might have made, but actually all the majority of the cases, the answers given in ICAI descriptions, it's very wrong. So it should be 76. It's not 73. Amount collected as tax but not paid, no time limit for notice. Once the notice is given, thereafter the order should be passed within 1 year. Okay. So this will come under amount collected as tax but not paid. Amount collected as tax but not paid. Then they can also test on the order time limit. The order time limit will be 1 year from the date of notice. But for notice, no time limit. Under GST law, the time limit for issuance of notice in case of non-payment of tax on account of reasons other than fraud. Reasons other than fraud means section 73. In case of section 73, so what is the time limit by which notice to be given? Usually the order should be passed within 3 years from the due date of annual return and notice to be given at least 3 months before. Means 2 years, 9 months. 2 years, 9 months. That is from the due date of annual return. GSTR 9 due date. GSTR 9 due date. So within 3 years, the order should be passed. Okay, order under section 73 should be passed within 3 years. Say for example, financial year is 2023-24. Due date of GSTR 9 will be 31st December 2024. So 3 years they need to pass the order. So that will be 31st December 25, 26, 27. And at least 3 months before the notice to be given, the show cause notice to be given at least 3 months before, that is 30/9, 2027. So 3 years minus 3 months. 3 years minus 3 months, that is what 2 years and 9 months should be taken. If it is 74, it will be 5 years minus 6 months. So 4 years, 6 months will be taken as the answer. Then next, chapter 20, liability to pay tax in certain cases. Mohandas, a registered person, has supplied goods to Karamchand under his own invoice on behalf of his principal Krishnadev, a registered person. Which of the following statements is correct? So in this case, Mohandas, a registered person, has supplied goods to Karamchand under his own invoice on behalf of his principal, a registered person. Own invoice means the agent is not acting on behalf of principal. When the agent not acting on behalf of principal, who is raising the invoice? Invoice is raised by the principal. But here who raised the invoice? Mohandas supplied goods to Karamchand under his own invoice on behalf of the principal Krishnadev. Under his own invoice means, so here invoice is raised by the agent. Agent acting on behalf of principal. Agent acting on behalf of principal. So if agent is not acting on behalf of principal, invoice raised by principal. Invoice raised by principal. But here invoice is raised by agent in his name. So what is the reason why we need to know this? When the agent is acting on behalf of principal, for any supply which is made by the agent, principal and agent jointly and severally liable. So not only Mohandas but also Krishnadev jointly and severally liable. What if the invoice is not raised by the agent? Then agent not acting on behalf of principal, invoice is raised by the principal. Principal is only liable. Principal is only liable. Okay. So then next one. Question number 2. Mr. Lal, a registered person under GST, was a proprietor of Spiceton restaurant. He died and left behind his wife and son on 15th August. His son, Mr. Paul, wants to continue the business of the deceased father. The GST consultant of Spiceton restaurant gives advice to Mr. Paul as to how he can continue the business of his deceased father. Which of the following options is correct? Yes, the business can be continued, but as there is a change in permanent account number, they need to get a new registration. So this Mr. Paul cannot continue registration. So he need to get a new registration and cancel the old registration of his father. Mr. Paul should apply for new registration and his own PAN, and he need to file ITZ for transfer of ITZ from the old registration to new registration. That is correct. Paul can get authorized signatory change. No, that is not correct. and Paul should close the old firm. Not necessary to close a business. And Paul should do the business with his mother as a new proprietor. Even if mother becomes a new proprietor, the registration will change because there is a change in permanent account number. So change in constitution resulting in change in permanent account number. New registration is only possible. Okay. So there is no option. So we need to cancel the old registration that is given in section 29. What are the reasons for cancellation of registration? Then next, chapter 21, offense and penalties and ethical aspects. In which of the following cases compounding of offense is not allowed under section 138 of CGST Act? A person who has been allowed to compound once in respect of any offense, not only this, all offenses. A person who has been convicted for an offense, once the imprisonment order is passed. See, remember, compounding is only once during the lifetime of a person. Compounding is only once during lifetime of a person. Okay, so this can be done only once. A person has been convicted means imprisonment order is passed, thereafter compounding is not possible. So this case compounding is not allowed, this case also compounding not allowed. A person who has been accused of committing an offense which is also an offense under any other law for the time being in force, this is not there. This is not there at present. So this is amended. This section 138 is amended. Based on the amended provision, option 1 and 2 only is the correct answer, not option 4. Okay. So this got amended. So Wide Finance Act 2023. Due to that reason, only in the first case, this point is now removed. So even if it is an offense under any other law, so we can go for compounding. Okay. So the correct answer is 1 and 2. Then question number 2. Sukanya, a supplier registered under GST, failed to pay GST amounting to 5,000 for the month of January. The proper officer imposed a penalty for failure to pay tax. Sukanya believes that it's a minor breach. No, it's not a minor breach. What is called as a minor breach? You know, minor breach means the tax should be less than 5,000. So here it is exactly 5,000. It is not a minor breach. So penalty is leviable since the breach is considered as minor breach if the amount is less than 5,000. Option A is the correct answer. Okay, less than 5,000, not equal to 5,000. This is as per section 126 of CGST Act, which says that if there is a minor breach or if there is a contravention of provision that is easily rectifiable and made without a fraudulent intent, then there won't be any penalty. Then chapter 22, appeals and revision. State whether the following statements are true or false. Any person aggrieved by any decision or order passed by the adjudication authority may appeal to such appellate authority as may prescribe within 3 months from the date on which the decision or order is communicated to him. Communicated means whenever he receives it. True. No appeal shall be filed to appellate authority unless the appellant has paid sum equal to 25% of the remaining amount of tax in dispute. False. It's not 25% of tax. It is 10% of tax. If it is penalty under 129, then only 25% of penalty. Okay. So appeal against section 129 order. So then pre-deposit is 25% of such penalty. But in this case, so it is not. So false. Adjournment of appeal shall not be granted more than 3 times to a party during the appeal. True. Maximum 3 times. The appellate authority shall have the power to refer back the case to adjudication authority that passed the said decision or order. So appellate authority don't have the power. It is actually false. So only appellate tribunal or court. Appellate tribunal or court is having that power. Okay. Appellate tribunal or court. High Court or Supreme Court is only having the power. So remanding the matter back for fresh adjudication when the adjudication is not done properly. Okay. So therefore option C is the correct answer. Then Sukimal, a sole proprietor, has to appear before the appellate authority. He decides to appear through an authorized representative. So who can act as an authorized representative? Sohan, his son, any relative can act as authorized representative but who has been dismissed from government service. No, they cannot. Any person who is dismissed from government service cannot act as authorized representative. Rohan, a company secretary who is adjudged as insolvent. No, cannot act. Mukul, practicing high court advocate. Yes. So answer 3. Generally, company secretary can appear as authorized representative, but they should not be adjudged as insolvent or they should not be guilty of professional misconduct. Okay, so High Court advocate can. Then next 3, an appeal to High Court can be filed in which of the following cases? A person aggrieved against the order passed by state bench. There is no area bench at present, only state bench is there. So against the state bench of appellate tribunal, yes, we can go for appeal to High Court. By a person aggrieved against the order passed by national bench or regional bench. There is no national bench or regional bench. There is only principal bench. So principal bench of appellate tribunal, no. So in that case, appeal to Supreme Court. Appeal to Supreme Court. Appeal cannot be made to High Court. For matters involving substantial question of law, yes, we can go to High Court because GST-AT is final fact-finding authority. Final fact-finding authority. So therefore, the appeal will be to High Court or Supreme Court only in case of substantial question of law. So therefore, 1 and 3 is the correct answer. Then next one, Miscellaneous Provisions, Chapter 24. Where the anti-profiteering authority determines that a registered person has not passed on the benefit of ITC to the recipient by way of commensurate reduction in price, the authority may order reduction in price, imposition of prescribed amount of penalty, that is 10% of the profited amount. That 10% of profited amount also not required to be paid if you pay the profited amount within 30 days from the date of anti-profiteering order, cancellation of registration, so all these things. Then GST complaints rating shall be assigned to every registered person, but this provisions is not effective at present. Not effective at present. We don't have, GST compliance rating at present, but it is on every registered person. Then chapter 25, now we are moving on to customs. ABC Limited exported certain goods last year. The buyer has sent back those goods since the same were under warranty and required repairs. Which of the following conditions are to be satisfied by ABC Limited to avail exemption on goods re-imported for repairs under notification number 158 of 95? So this is exemption. Actually, this 158 of 95 is now changed to 60 of 2018. So this is the revised notification. So when the goods are exported, it can be brought into India. Okay. So if it is required for repairs or reconditioning, it can be brought back into India. And after, first they have exported it. So after export, they can be bringing it to India, import. And after import, this time limit should be within 3 years, like that. And thereafter, they have to re-export. And this re-export should be within 6 months plus 6 months. So goods must be re-exported within 6 months or 1 year if the time limit is extended. That's correct. And ABC at the time of importation executes a bond that the goods are re-exported. If in case the goods are not repaired, new goods are to be sent. No new goods. This is not the correct condition. Only 1 and 2. And also this is also their export to import. If it is for repairs, the goods should be brought back to India within 3 years from the date of export. Or if it is notified good 7 years, if it is from Nepal and Bhutan, it will be 10 years. Those conditions. Then next, which of the following is correct for destroyed goods under section 23 of Customs Act? Section 23 is applicable in case of remission of duty when the goods are lost, destroyed or abandoned. So if it is applicable for total loss of goods, even if the same can be recovered, no, if the same can be recovered, so it does not mean it is destroyed. So it will not be the case. Then the provisions of this section are also applicable if the goods lost due to pilferage. Pilferage, we have a different section, section 13. This is not applicable. These provisions of section are applicable even if the goods are destroyed at the warehouse. Yes. So at any time before actual clearance, section 23, and damage, abatement at any time before actual clearance. The importer need not to prove loss. No, they have to prove. First, so pay duty, and then prove, and then we will get remission of duty. Remission of duty. Then next, which of the following combination is correct? Goods pilfered after unloading and before clearance for home consumption. After unloading, before clearance for home consumption, pilferage. So pilferage, it is no liability to pay customs duty. So for 1, it will be 2. Then goods lost or destroyed before clearance for home consumption. Destroyed, na? Destroyed means remission of duty. For 2, it will be 3. Then damage or deterioration, so that will be abatement. So for 3, it will be 1. So option C is the answer. Then which of the following options is or are correct? Indian customs waters extend up to 12 nautical miles. No, this is territorial waters. Indian customs waters is up to 24 nautical miles. No, this is also wrong. Indian customs waters extends up to exclusive economic zone. True, 200 nautical miles. Indian customs waters include territorial waters and extend up to 200 nautical miles. Correct. So both are correct. 3 and 4 is correct. So up to 12 nautical miles is known as territorial waters. Territorial waters. Then next one. Question number 5. XYZ sent certain goods abroad for repairs. XYZ Limited has been advised by their consultants that they will have to pay customs duty only on fair cost of repairs, cost of materials used in repairs, freight and insurance both ways on reimportation under notification 45/2017. Yes, true. Provided they satisfy the conditions. What is that? The reimportation is done within 3 years, which can be extended for 5 years. Yes, 3 years plus 2 years. And the exported and imported goods are same and the ownership has not changed. All the 3 conditions should be satisfied as per notification 45/2017. Then question number 6. In which of the following cases can an importer claim pilferage and choose not to pay duty under section 13, provided the goods are not restored to the importer? When the goods are pilfered while on high seas, no. First, there is no levy. When it is pilfered during high seas, means before import, there is no levy. Goods pilfered before unloading, there is no levy. Goods pilfered after unloading, but the order for home consumption is passed by the proper officer. Yes. Goods cleared for home consumption. No, we cannot. After clearance. So pilferage should have happened when? After unloading. After unloading and before order for clearance. Before order for clearance. Okay. So then only we will get the benefit. So only in the third case. Then next, which of the following statements are incorrect? Special exemption under section 25 is granted by issuing a notification. No, special exemption is by order. General exemption is by notification, but they are telling order wrong. Special exemption is required to be published in the official gazette. No, no need to publish. General exemption is not required. No, it should be published. All these statements are incorrect. Okay, so we have special exemption and general exemption. Special exemption and general exemption. Special exemption is in some extreme circumstances. Okay, whereas general exemption is normally, this will be by order, whereas this will be by notification, and order not published in official gazette, not published in official gazette, whereas this should be published in official gazette. It should be published in official gazette. Which one? The general exemption. Then question number 8. In which of the following cases can importer claim abatement of duty under section 22? If the goods are pilfered, no, pilferage section 13. Goods damaged, yes, by accident after unloading but before examination for assessment by the customs authorities, possible, but this is due to negligence. Due to negligence, not possible. It should not be due to negligence. Goods destroyed by accident while being removed from warehouse after clearance for home consumption. If the goods are destroyed by accident while being removed from the warehouse after clearance, no, not possible. So when the damage should have happened, damage unloading, during or at the time or after unloading, at the time or after unloading, but before clearance, but before actual clearance. So once it is cleared, we will not get the benefit. Okay. Then goods damaged by accident, not due to negligence, after unloading but before examination, yes, possible. So only 4 is the correct answer. The taxable event under Customs Act is, so 4 conditions. There must be goods. The goods should be dutiable and it should be imported or exported. Import or export into India or from India, option 1. Supply of goods. Supply, there is no taxable event under customs. Sale, manufacture. So this will not lead to taxable event. Import or export is a taxable event under customs. Then chapter 26, types of duty. First question, anti-dumping duty is calculated as follows. So anti-dumping duty is what? Dumping margin or injury margin, whichever is lower. So dumping margin or injury margin, whichever is lower, option B. Anti-dumping duty is imposed when the exporter is exporting goods to India at a price less than their domestic selling price. Okay. Then which of the following duties are excluded while computing social welfare surcharge? Social welfare surcharge is only on basic customs duty. On safeguard duty, there won't be social welfare surcharge, countervailing duty, social welfare surcharge itself, anti-dumping. Everything should be excluded. So because social welfare surcharge at 10% only on basic customs duty. Then question number 3, which of the following statement is valid under customs law? Imposition of countervailing duty and anti-dumping duty. Countervailing duty also called as ASD, anti-subsidy duty, on an article to compensate for the same situation of dumping. No. So actually this is not valid because section 9 anti-subsidy duty and 9A anti-dumping duty are mutually exclusive. So the first one is not valid. First one is not valid because it is mutually exclusive. Imposition of countervailing duty on article for the reason that same is exempt from duty borne by an like article when meant for consumption in the country of origin. Countervailing duty on an article for the reason that same is exempt from duty. No. So if it is exempt from duty, that does not mean subsidy is given by the exporting country. Not valid. There should be a subsidy given by the exporting country and that article should be imported into India. Exemption does not mean there is a subsidy given. Imposition of anti-dumping duty on articles imported from member country of WTO on determination that import of such article materially retards the establishment of any industry in India. Yes. So third one is valid only after carrying out, prima facie, in principle, there should be evidence that it will cause damage or injury, then only it will be levied. So only 3 is the correct answer. Then question number 4, countervailing duty under section 9 of Customs Tariff Act shall not be levied unless it is determined that the subsidy relates to export performance. Subsidy relate to use of domestic goods over imported goods. True. Subsidy is conferred on all persons, no, limited persons. If subsidy is conferred on limited persons, then only there will be anti-subsidy duty. So therefore 1 and 2 is the correct answer. Which of the following statement is false? So they're asking the false statement. Anti-dumping duty is imposed when an article is exported from any country to India at more than its normal value. False. At less than its normal value. Then next, as first statement itself is false, that itself is the answer, but we will read others also. Absorption of countervailing duty is said to have taken place if there is a decrease in export price of an article without commensurate change in resale price. Yes, how much ever dumping duty or countervailing duty is levied in India, the exporter reduces his price in order to absorb this. That is called as absorption. True. And safeguard duty shall not be imposed on articles originating from developing country if the share of imports of that article from that country does not exceed 3%. True. Central government may exempt notified quantity of any article when imported from any country into India from whole or part of safeguard duty. True. So government can give some notified countries if you are importing the product. See, safeguard duty is a product specific. If you are importing that product from any country, there will be safeguard duty. Then next, question number 6. Countervailing duty under section 9, that is anti-subsidy duty, shall not be levied unless it is determined that, so already they have given, subsidy relates to export performance, use of domestic goods, conferred on all persons is wrong. So 1 and 2 already we have, it's a repetition. Then next chapter, chapter 27, classification of imported and exported goods. Which of the following statements are correct as per general rules for interpretation of tariff? A durable wooden case, specially shaped to contain a musical instrument and presented within the same, shall follow the classification of such musical instrument. True. First one is true. You know why? Already I told you this. That is, when you import a violin box, which can be used only to keep the violin box should be classified along with violin. Packing material presented with the goods therein shall be classified with the goods if they are of kind normally used. If it is normally used and interchangeable for repetitive purpose, then you should be classifying it under the heading applicable to that. So that for packing material, so that is false. Only specific packing material should be classified along with the main article. The heading which provides a most specific description shall be preferred to heading providing general description. 3, correct. Prefer specific over general. So 1 and 3 is the correct answer. Under the customs law, electric shaving machine is classifiable under the following: 8510 shavers and hair clippers with self-contained electric motor, 8509 electromechanical domestic appliances. So which should be taken? Electric shaving machine. Prefer specific over general. Prefer specific heading. Prefer specific heading over general heading. So we need to prefer specific heading over general heading. So therefore, what is the specific heading? Shavers and hair clippers is the specific heading. So 8510 should be taken. Then next, chapter 28, valuation under customs. For the purpose of rule 7, deductive value. So determine the unit price in greatest aggregate quantity. Greatest aggregate quantity first you need to take, and the price at that greatest aggregate quantity. First quantity 500, 400, 500 units are sold at 95, 400 units are sold at 100. What is the highest quantity? 500. At 500, so this is the greatest aggregate quantity. Greatest aggregate quantity. At this greatest aggregate quantity, what is the price? 95. So option 1. Then for valuation purpose under customs law, Customs Act, which of the following transactions would be considered as having been made between related parties? A foreign company A Limited having a joint venture with Indian company B Limited in the name of AB Limited. An Indian company A Limited holds 51% shareholding in AB Limited. Control is there. As there is a control, definitely it is a related party transaction. A foreign company A Limited having joint venture with an Indian company B Limited in the name of AB Limited. So joint venture. So yes, definitely control is there. Control is there. So therefore, third one, A Incorporation, a company in USA holding 4% of the share capital of importer company B Limited an Indian company, no control. As there is no control, so therefore only 1 and 2 is the answer. The meaning of related under customs is same as the meaning of related under GST, except that the meaning of related under GST we have two companies with a common shareholder 25%, but in customs it is two companies having a common shareholder 5%. And one more difference is that in GST related definition family is defined, but in customs related definition family is not defined, but otherwise the meaning of related is same. Then which of the following statement is not correct in the context of valuation of imported goods? So with respect to valuation of imported goods, they are asking about which of the following statement is not correct. Buying commission is not includable in the value of imported goods. True. Only selling commission, but they are asking which of the following statement is not correct. Rate of exchange notified by CBIC on the date of presentation of bill of entry to be taken. True. For import by air, so transportation cost cannot exceed 20% of FOB. True. Social welfare surcharge is leviable on basic customs duty, integrated tax and compensations as false. So social welfare surcharge is only on BCD, only on basic customs duty. So on option D is the wrong answer. I mean, which of the following is not correct? That is D. The transaction value of imported goods is not accepted for valuation purpose when the use of the imported goods by the buyer is subject to the restriction imposed by the seller, which will substantially affect the value. Yes, if it is unconditional or if it is a conditional sale or a restricted sale, transaction value will not be taken. The buyer and seller are not related. So if the buyer and seller are not related, okay, transaction value will be taken. So this transaction value taken, transaction value accepted. Price is not the sole consideration. Transaction value rejected. So 1 and 3. The relevant date for determining the rate of exchange in case of imported goods is the date of presentation of bill of entry. And which bill of entry in case of warehoused goods? Inbound bill of entry. But that is not asked here. Certain goods were imported by air. The FOB value of the goods is 100. The cost of transport, loading and unloading and handling charges up to the place of importation is 25. Insurance is 10. So what should be taken as the value? Simple. FOB 100, but transportation as it is air freight, actual to 25 or 20% of FOB, 100 into 20%, 20, whichever is lower at 20, and insurance will be actual ascertainable will take. So option D is the answer. Which of the following statement is or are not correct? Not correct for identical goods for valuation purpose under Customs Act. Identical goods are same in all respects, including physical characteristics, quality and reputation as the goods being valued except for minor differences. Yes. So which of the following is, so first one is true. Then next, identical goods can be produced in any country. No, same country. Same producer preferably. Identical goods are produced by the same person. Where such goods are not available can be produced by different person. Yes, true. But the second one is false. So second one is the answer. Which of the following statement is not correct? Then question number 8. For determining CIF price of imported goods, certain additions are to be made to the value of imported goods under Rule 10. If cost of insurance is not ascertainable from the documents submitted before the customs authorities, then such amount is determined as 20% of FOB value of imported goods. So, if cost of insurance is not ascertainable, then the amount is not 20%, it is 1.125%. So, therefore, first one is wrong. Second one, 1.125% correct. Where FOB value is not ascertainable, but sum of FOB is ascertainable, it is 1.125% of such sum, correct. When FOB value not ascertainable, 20%, see 20% will not come in case of insurance. So second and third. So in case of freight only, it will be 20%. In case of insurance, 1.125% of FOB. Then next, importation and exportation of goods. Outline the stepwise procedure for importation of goods. Grant of entry inwards. No, first it will be filing of import manifest. Filing of import manifest. Thereafter, they will get grant of entry inwards. then only it will be unloading of goods. And then assessment will be done, but before that bill of entry needs to be filed. And thereafter assessment will be done. And finally payment of customs duty. So 213, 5, 4, 6. So option D is the answer. So this is literally based on import procedure. Then next, warehousing. What is the relevant date for determining rate of duty in case of warehoused goods cleared for home consumption? In case of warehoused goods, the relevant date for rate of duty is the ex-bond bill of entry. Ex-bond bill of entry for home consumption. But in case of Kesoram Rayan case, when the goods are not cleared within the permissible warehousing period, on expiry of warehousing period, it is deemed that the goods are improperly removed, and that date, whatever is the rate of duty, that should be taken. Then refund. Which of the following statements are incorrect in relation to refund provisions? Interest on delayed refund is payable to the applicant only if duty ordered to be refunded is not refunded within 3 months from the date of receipt of refund application. True. First one is true. Within 3 months from the application, if the refund is not granted, then interest will be payable at the rate of 6% per annum. If imports were made by individual for his personal purpose, the amount of duty refundable is paid to the applicant instead of being credited to consumer welfare fund. True, because we don't have to prove unjust enrichment. If a person is importing goods for his personal purpose, he don't have to prove unjust enrichment, so refund will be given to him. Application for refund has to be made within 1 year of payment of duty, where the duty is paid under protest. So false. In case when the duty is paid under protest, the time limit of 1 year is not applicable. Doctrine of unjust enrichment is applicable if the refund of duty is relatable to duty drawback. No, false. So duty drawback, we don't have to prove unjust enrichment. Okay. Then next. In which of the following cases the refund under section 27 is credited to consumer welfare fund? See, generally refund is subject to unjust enrichment. If the importer proves that there is no unjust enrichment, it will not be credited. Where the goods are imported for non-personal use and he could not prove that there is no unjust enrichment, it will be credited to consumer welfare fund. Duty drawback, no need to prove unjust enrichment. If the duty paid in excess is evident in the bill of entry, like say we imported 200 units, but we filed bill of entry for 400 units. So the 200 units excess paid is evident in the bill of entry, no need to prove unjust enrichment. Then next one, FTP. Which of the following privileges are granted to status holders? So for this, we need to remember, so wipes made in India exempted. Wipes made in India exempted. What is that wipes made in India exempted? W refers to warehousing for 2-star and above. I, so we have input output norms on priority within 60 days, and priority, preferential clearance and priority, and E, exports free of cost. Then yes refers to self certification. Okay, then made in India certification, exempted from furnishing bank guarantee. Authorization on self declaration basis, yes. 2-star and above can establish export warehouses, yes. Input output norms on priority within 60 days, this is wrong. Input output norms on priority within 60 days. Exemption from furnishing bank guarantee. So 1, 3 and 4 is the answer for this. So in continuation to our MCQ discussion, so we have completed all the chapter wise MCQs given by ICAI, and now we are moving on to, so this case study MCQs. So they have given some case study type MCQs, that is integrated case scenario MCQs, that also we are going to see. So look into the first case study. SR Associates is a partnership firm registered under GST in the state of Rajasthan. In the month of July, following transactions were made by SR Associates. Purchase of commodity Y. So they made some purchase of commodity Y on 1st July from registered person for an amount of rupees 5 lakhs. So 5 lakhs is the purchase price of this commodity X at the rate of, for an amount of 5 lakhs at the rate of 1000 per ton. Means how many tons they would have purchased? So 5 lakhs divided by, so 1000, so that will be somewhere like 5 lakhs divided by 1000. 5 lakhs divided by 1000, that comes to 500 tons. And from the open market, the said commodity was deposited in the warehouse of NCDEX Limited in Rajasthan as security against transactions entered by SR Associates on the same day. So actually, when you see a case scenario question like this, when you start reading this way, what will happen is that you will not know what you are reading, and you will not know why you are reading, and you don't know how you need to approach. So that's why there is a clue for this. What is that? Don't read this paragraph first. Go to the MCQs. Go to the MCQs. In the MCQs, compute the taxable value of inward supply of commodity X for SR Associates in the month of July. So they are making some purchase of commodity X. What is the taxable value of inward supply? That is question number 1. Next, compute the value of outward supply made by SR Associates in the month of August. So mainly we need to talk about the value of inward supply and value of outward supply. Then next question is related to time of supply for subscription of AI based platform. So there is one paragraph related to some AI based platform services they received. What is the time of supply for that? And compute the net GST payable. As there is net GST payable, so definitely output tax, input tax, everything we need to see, and we need to arrive at the net GST payable. Now when you read the paragraph, keep that in mind. First we need to know what is the outward supply and who is liable to pay GST on that, whether it is FCM or RCM, and even you need to check whether it is exempted or not. And as we don't have CGST, SGST, IGST related problems here, because in MCQs they gave the final answer. If you see question number 4, the answer is 22,700, 81,000 and 9,000, which means that we don't have to classify so the transaction into intrastate or interstate. Suppose in the options if we have IGST so and so amount, CGST so and so amount, SGST so and so amount, then we need to bifurcate, okay, whether it is intrastate or interstate. Here we don't have to. So place of supply provisions we don't have to apply. We need to just check whether it is outward supply or inward supply, FCM or RCM, is it exempted? So that aspects we need to see. So start with the beginning. So SR Associates is one company which is located in Rajasthan, and they are making purchase of some commodity X 5 lakh rupees at the rate of 1000 per ton from the open market. So what they did, the said commodity was deposited in a warehouse of NCDEX Limited, an agricultural commodity exchange, okay, in Rajasthan, as a security against transactions entered by SR Associates on the same day. So basically what they will do is that they make a hedge. So whenever you purchase something, and in order to protect that particular purchase against decrease in the price, so we make a hedge by entering into derivatives market, okay. So here what they did, in order to hedge the aforesaid transaction, on 1st July SR Associates undertook a derivative sale transaction. Derivative sale transaction is not a supply. Why derivative transaction is not a supply? And the first one is inward supply. The first one is inward supply. And why this derivative is not a supply? Simple reason, derivative transaction will be coming under transaction in securities. Transaction in securities is neither goods nor services na. So consequently it is not a supply, and they make a sale at the rate of 1100 rupees per ton, okay, but it is not a supply. SR Associates took subscription for an AI, artificial intelligence based platform, for an unrelated party, ABC Incorporation, a company based in US, to get real time updates on the pricing of commodity X in the international market. So it's an import of service. How import of service? So where is the supplier located? Supplier is located outside India. Where is the recipient located? SR Associates in India. So this is some artificial intelligence based platform. So basically it is like OIDR services, and place of supply is in India. So it's an import of service. It's an inward supply, and this inward supply is covered under RCM. Whereas the first inward supply is covered under FCM. So supplier only will pay. So because it's commodity X, we don't have any RCM. And in this case it will be coming under RCM, inward supply, RCM, import of services. And ABC Incorporation charged rupees 50,000 for subscription. The invoice was issued on 1st July, but the payment was made to ABC on 20th August. In the MCQ, there was one MCQ related to this AI based platform like that. So now we will read that, so that whether we will be able to connect the answer now itself we will see. If you look into this, what is the time of supply for subscription of AI based platform? So time of supply, based on the data we will be able to do. So what is the time of supply in case of services covered under RCM? So date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. What is the date on which payment is made to supplier? So payment was made to ABC Incorporation on 20th August. Okay, so 20th August is the date on which payment is made to supplier. So section 13 subsection 3 talks about time of supply in case of RCM. So date of payment to supplier. What is date of payment to supplier? So the date of payment to supplier, if you see, so see the date on which payment is made, 20th August. So 20th August. Then B, 61st day from date of invoice. 61st day from date of invoice. So what is the date of invoice here? Date of invoice is 1st July. So 61st day we need. So 30 days you add in July and 31 days you add in August. Okay, so 61st day. So therefore 31st August, 31st August. 31st August is the 61st day. Whichever is earlier. Which is earlier? 20th August is earlier. So option C is the answer. The next one. NCDEX. This NCDEX is that Agricultural Commodity Exchange. They charges a rent from SR Associates at the rate of 10,000 per month and service charges at the rate of 20,000 per month. So this 10,000 per month and 20,000 per month are the charges incurred for storage of this commodity. Again, this is an inward transaction. Okay, this is an inward transaction and it will be coming under FCM. On the date of expiry of the future contract of the month of August, that is 31st August. So first when they entered into the sale transaction of derivative, sale of futures, sale of future contract on 1st July, and August is the expiry, 31st August is the expiry. So the commodity was 900 per ton. So SR Associates squared off the contract without physical delivery for the month of August at the same rate. So what does it mean? Squaring off means what? So usually in derivatives there won't be any physical delivery. So there will be only squaring off of the transaction, so the difference amount is paid. So here they made a derivative sale transaction, means they entered into contract to sell at 1100. But today the market rate is only 900. So which means that 200 rupees they will be getting. So why? Because the market price, they entered into agreement to sell at 1100, but today's market rate is 900. So which means that still, so they will be getting the 200 rupees. So that is a gain for them. So SR Associates squared off the contract without physical delivery for the month of August at the same rate. Okay. So then NCDEX charged brokerage on the transaction. Here what they are doing for squaring off, first sale transaction, how to square off? So it's like a purchase contract, sale contract and purchase contract. So NCDEX charged brokerage on the transaction, both purchase and sale of derivative contract separately at the rate of 5,000 rupees per contract from SR Associates in the month when the transaction was entered and when the transaction was squared off. So 5,000 rupees at the time of July. So they collected, and again 5,000 collected at the time they squared off. So two inward supply. So this is inward supply. See, transaction in securities is neither goods or services, but this is facilitating or arranging transaction in securities. It's an inward supply covered under FCM. Then on purchase of commodity X, additional levy in the form of mandi tax was applicable at the rate of 10 rupees per ton, which is not included in the rate per ton in point number A above. So this is actually inclusion in value as per 15(2)(a). Taxes, duties and cess by whatever name called other than GST should be included in the value. So this 10 rupees per ton, already we have calculated how many tons. So 500 tons. So 500 tons into 10 rupees per ton. So 500 into 10, that is 5,000 is the mandi tax. So this should be included in the value of commodity X. All the amounts given above are exclusive of GST unless otherwise provided. The opening balance of input tax credit is nil, subject to the information given above. Assume that all other necessary conditions for availing ITC have been fulfilled. Assume no other outward or inward supply apart from the aforesaid transaction in the month of July and August. And rate of GST 18%. We don't have to bother about intra or inter, so 18% we will take. Compute the taxable value of inward supply of commodity X. So what is the purchase price of commodity X? Purchase price of commodity X, if you see 5 lakhs is the commodity X purchase price. So the transaction value is 5 lakhs. Okay, 5 lakhs is the transaction value. And what is the Mandi tax? Apart from that, so inclusion, only one inclusion. So NCDX charges, see this they are not purchasing from NCDX na. They are asking like what is the taxable value of purchase of commodity X? 5 lakhs plus we are paying a Mandi tax 5,000. So 15 to A, so that will be included 5,000. So then all others are separate transactions. So this 10,000 and 20,000 is for storing the commodity X. So that is not purchase price of commodity X. So 5 lakh 5,000 will be taken as the assessable value. So therefore option D is the answer for this. Then compute the value of outward supply made by SR Associates in the month of August. So what are the outward supply transactions? So here if you see, all these are inward supply and they don't have any outward supply, because if you see, first one is inward purchase, next one is not a supply, inward, and 15 to A inclusion. So they don't have any outward supply in this case. Okay. So the answer for this, as they don't have any outward supply for the month of August, so the answer will be nil. And next again, fourth one, compute the net GST payable in cash by SR Associates for the month of August. Okay. So actually you don't think that it is nil. See, they don't have outward supply, but they have some inward supply under RCM. So inward supply under RCM, definitely they need to pay GST na, even though they have input tax credit. So is there any inward supply on which they need to pay GST under RCM? Yes, they have. What is that inward supply? This 50,000 rupees is the inward supply on which they need to pay GST under RCM 18%. So 50,000 into 18%, 9,000 rupees is the answer for this. Why? See, generally they don't have outward supply. So gross liability will be nil, and input tax credit they have, but they have to pay GST under RCM. So that GST under RCM should always be payable. So what is the way in which we need to compute the net GST payable? Gross GST under FCM minus ITZ. Minus ITZ is called as, and minus ITZ plus GST under RCM. So now if you add this, then what we get is known as net GST payable. Okay. So this is how we need to arrive at the answer. So this is the answer for case scenario 1, and they can also make some more questions like what is the input tax credit available, also they can ask. Suppose if they ask what is the input tax credit, so whatever inward supplies that we have, maybe that can also be asked as a question. So what is the ITZ? What is the ITZ for July month? What is the ITZ for July month? Like that they can ask one question. So what is the ITZ available? First we have commodity X purchase 5 lakh 5,000. On that 5 lakh 5,000, 18%. So 90,900. 90,900 on commodity X purchase. Correct. 5 lakh 5,000 into 18%, 90,900. And thereafter next inward supply if you see, so this 50,000 rupees into 50,000 into 18%. So that 9,000 rupees also on the import of services, 9,000, and thereafter all these in the month of July only. And next NCDX charges 10,000 per month and 20,000 per month. So 30,000 into 18%, 5,400. That is also ITZ, and we don't have any restriction there. And next brokerage, they charge brokerage for the month of July 5,000, for the month of August 5,000. So right now we are talking about ITZ in the month of July. So 5,000 brokerage into 18%. So that will be 900. And thereafter, so next one, it is included in the value. So that's it. So this is the ITZ that is available in the month of July. So how much that comes to? 90,900 plus 9,000 plus 5,400 plus 900. That will be 1,06,200. Like this also a question can be coined on this. See, that's what. Not necessary that from the question, like from the case scenario, they need to coin many questions. So that's why when you see the MCQs, you will know as to what information is relevant and what is not relevant, so that you don't have to waste time. Okay. So then we are moving on to case scenario 2. Disha Enterprises Private Limited case. So in this, they have given some big information, but don't just get worried after seeing this information and all. So first we will see the MCQs. So determine the value of taxable supply in respect of sale and purchase of foreign currency by Kolkata office and Mumbai office. So they have one Kolkata office and Mumbai office. So as per rule 32(2)(a), what is rule 32(2)(a)? Value in case of notified supplies. In that foreign exchange transactions, we have two options. 32(2)(a) is option 1. When one of the currency exchange involves Indian rupee and RBI reference rate is available, purchase currency or sold currency and RBI reference rate into units of currency. When both suppose if RBI reference rate not available, gross amount into 1%. So like that we have. So that rule sub rule A means option 1. Option B is actually slab rate model. They are asking this A. Then the value of taxable supply received by Mumbai office in the month of September on which they need to pay tax under RCM. So while analyzing the transaction itself, you carefully see whether it is inward supply or outward supply and whether it is covered under FCM or RCM. So you will be able to do this. Then the value of taxable outward supply made by Kolkata office in the month of September on which Disha Enterprise Private Limited is liable to pay tax under forward charge. So while analyzing all transactions, we need to keep that in mind. Then the maximum amount of pre-deposit that Disha Enterprises Private Limited can be asked to deposit under IGST for filing an appeal before appellate authority. So we have a pre-deposit for first appeal, so that amount, and the maximum penalty prescribed under section 122 of CGST Act for failure of Kolkata office to deposit the tax on the advance received from Ganesh Flour Mill. So penalty under 122. Now we will see the transactions. First, Disha Enterprise Private Limited is a financial service company having its offices in Kolkata, West Bengal and Mumbai, Maharashtra. The company is registered under GST in both the states. The company operates through two segments: banking services and advisory and consulting services. Banking services, advisory and consulting services. The aggregate turnover of the company during the previous year was 80 lakhs in West Bengal, 60 lakhs in Maharashtra. That is their aggregate turnover during the previous year. Now, being banking services, they are providing recovery agent service, direct selling agent services, and advisory and consulting service, company incorporation, return filing, then detailed project report preparation, business promotion or product marketing. These services they are providing. Now, the company has carried out the following transactions during the month of September. So they have two branches, one in Kolkata, so West Bengal, another in Mumbai, Maharashtra. So Kolkata office and Mumbai office, some transactions they have given. First, sale and purchase of foreign currency in the course of business. So this is an outward supply. This is an outward supply, sale and purchase of foreign currency in the course of business, and they have asked us to refer note 3. So note 3, you see, following purchase and sale of foreign currency was made by the company during the month of September. Kolkata office has purchased, so they have purchased, Kolkata office have purchased US dollar 10,000 from Messrs Moneywise, a forex dealer, at 73 rupees per dollar on 10 September. The RBI reference rate on the date was 74 rupees per US dollar. Okay. Now, actually, transaction involving forex transactions between banks, financial institutions, then forex dealers. So between them, if there is any forex transaction, that will be exempted, that will not be chargeable to GST. Okay. So this is actually their inward supply. Whose inward supply? That Kolkata office inward supply, but that inward supply is exempted. Why it is exempted? So we have an exemption. So between banks, financial institutions, if there is any transaction, that is exempted, even though it is exempted, but the value needs to be determined, correct? So the value they are asking us to determine in terms of rule 32(2)(a), that is the first MCQ. Okay. Then one more transaction. Mumbai office has made one transaction. Mumbai office has sold US dollar 5,000. So that's an outward transaction. And to money matters on 15 September at 73.2 per dollar, RBI reference rate for US dollar on the date is not available. So this is sale, and sale to forex dealer. So this outward supply is also exempted. Why it is exempted? So any transaction that is made between, so a forex dealer and a bank, bank and a forex dealer, so that transactions will be exempted. Basically they are bank na, so they are a financial service company. They also provide banking services, but here banking services they are providing, they are not a bank. Okay, so that is a difference here. So if they are a bank, then the transaction will be exempted. If they are not a bank, then this transaction will not be exempted. Here say they are providing banking service as recovery agent and direct selling agent, means they are not a banking company. So due to that reason, so this transaction will become taxable. If it is between a banking company, forex dealer, then it is exempted. Otherwise it will be taxable. So we don't have any exemption with respect to that. This will be taxable. And banking transactions, that is this foreign exchange transactions, will be coming under FCM. We don't have RCM with respect to this. Now, so in relation to this, they have asked one MCQ. What is that MCQ? So determine the value of taxable supply in respect of sale and purchase of foreign currency by Kolkata office and Mumbai office as per 32(2)(a). As per 32(2)(a), what we need to do? First we need to take, when one of the currency exchange involves Indian rupee and RBI reference rate is available, purchased currency or sold currency minus RBI reference rate into units of currency. So $10,000 into, what is the transaction? 73 and 74. So 73 and 74. So the difference we need to take plus, this is one value. Another value is Mumbai office has sold $5,000 at 73. RBI reference rate not available, means gross amount exchange Indian rupees into 1%. So 5,000 into 73.2, $5,000 into 73.20 into 1%. Okay, so that should be taken. So 10,000 into 1, 10,000. So this is for Kolkata office, 10,000. And then for Mumbai office, it will be 5,000 into 73.2 into 1%, that is 3,660. So Mumbai office 3,660. Option B is the answer for this. Okay. Then next one, if you see another transaction, amount received. Again, amount received means what? It's an outward supply. Amount received, outward supply from Devidas Private Limited. It has sponsored the business exhibition organized by Disha Enterprises Private Limited. In case of sponsorship services, so if it is sponsorship of a recognized sports body, it is exempted, otherwise it will be taxable. In case of sponsorship service, if the recipient is covered under like body corporate or firm, it will be RCM. So here the recipient is who? The one who is paying the money is the recipient. Devidas Private Limited, recipient, sponsorship service, recipient is body corporate, so it will be covered under RCM, but it will be taxable. Then commission received as a direct selling agent. Again, it's an outward supply. Commission received as a direct selling agent. For direct selling agent, we don't have any exemption, but we have one RCM point. If the direct selling agent, supplier is other than body corporate or firm, but here the supplier is body corporate company, Disha Enterprises Private Limited, so it will not come under RCM, it will be coming under FCM, direct selling agent services. Commission received, again it will be outward supply. Commission received from private banks for acting as recovery agent. So recovery agent service is covered under RCM for bank or financial institution, so it will be payable by the bank under RCM. Then professional fee received, again it will be outward, and professional fee we don't have any RCM. For formation of a company, LLP or society, so this will be coming under FCM, but related to this there is one note 2. So have a look into note 2. Out of the professional fee of 80,000, so this 80,000 rupees is there na, out of this 80,000 received by Kolkata office for the formation of company, 15,000 is towards reimbursement claim from client. It was separately mentioned in the invoice indicating that it was deposited with the registrar of companies, means expenditure incurred as a pure agent. Rule 33, expenditure incurred as a pure agent, recipient liability incurred by supplier and recovered from the recipient by acting as a pure agent, it will be excluded from supply. It will be excluded from supply, therefore it will not be chargeable to any GST. So this 15,000 portion. Then next one, professional fee received for GST or TDS return filing. Again it will be coming under outward supply. Okay, outward supply, professional fee, so this will be coming under FCM, so 65 and 75,000. Participation fee received from customers for the business exhibition organized by the company, so outward, but we have an exemption. If the business exhibition is held outside India, it is exempted. But where is it held? Held in Russia. So held in Russia, therefore this part is exempted, whereas this one held at Chennai, what will be taken as the place of supply? The place of supply will be, either location of recipient or location where the event is held. So therefore it will be taxable. 4 lakhs will be taxable. This 5 lakhs portion will be exempted. See this. The participation fee of 50 lakhs received by the company in respect of business exhibition organized at Russia under the theme Indian Traditional Fair, in which 10 lakh Indian companies had participated. A participation fee of 5 lakhs from each company was collected for providing them a stall, furniture and other amenities in Russia. The participation fee of 4 lakhs in respect of business exhibition organized by company in Chennai, in which 100 companies has participated. That information is actually not relevant. So we already know that. So whenever business exhibition is held outside India, the consideration received towards that business exhibition will be exempted. Then legal fee paid to Sundaram, an advocate. So this is an inward supply. Inward supply, we need to know whether it is taxable or exempted. So see their turnover during previous year. The turnover during the previous year is 80 lakhs, 60 lakhs. So advocate services provided to a business entity whose turnover during previous year does not exceed threshold limit is exempted. In this case, their turnover during previous year exceed threshold limit. Therefore, it will be inward coming under RCM. Payment made for security services by way of supply of security personnel, inward. So security agency service will come under RCM if two conditions are satisfied. Supplier is other than body corporate and recipient is registered. So here supplier should be other than body corporate, but in case of first case supplier is body corporate, so it will come under FCM. Next case supplier is partnership firm other than body corporate, therefore this transaction will come under RCM. Supplier should be other than body corporate, recipient should be registered, okay, then it will come under RCM. So these are the transactions. Then up to this note 3 it is over related to the table, and then note 4 and 5, these are separate transactions for which separate MCQs are there. In an order dated 14 September issued to Disha Enterprise Private Limited, the Joint Commission of CGST Mumbai has raised a demand of rupees 600 crore on Mumbai office in respect of an interstate supply transaction. The company is disputing the entire demand and wants to file an appeal before the appellate authority against the order of joint commissioner. Means it's a first appeal. What is the pre-deposit in case of first appeal? The pre-deposit in case of first appeal is 10% of the disputed tax, 100% of admitted due, but we don't have any admitted due. So 10% of disputed tax subject to maximum 25 crores under CGST. Here the 600 crores is the total GST, means IGST. Now there is one MCQ related to that. See that. What is the maximum amount of pre-deposit that Disha Enterprises Private Limited can be asked to deposit under IGST Act, for filing an appeal before the appellate authority? Under IGST Act means what? So 10% of the disputed tax subject to maximum 25 crores under CGST and 25 crores under SGST. So therefore it will be 10% of disputed tax subject to maximum 50. When you take IGST, the maximum will be 50. So therefore 10% of the disputed tax. What is the disputed tax here? 600 crores. So 600 crores into 10% or subject to maximum 50 crores. Okay. So whichever is lower. Whichever is lower. So whichever is lower is what? So 50 crores. Or you can do it separately for CGST, SGST and total it. So for example, if you do it under CGST, so 300 crores. So 300 crores into 10% or 25 crores, whichever is higher. So that will be 25 crores. The same way under SGST also 300 crores into 10% or 25 crores, whichever is higher. So that will be 25 crores. So that will come to 50 crores will be taken as the answer for this. Then this is about that fourth paragraph. Fifth paragraph, the Kolkata office of the company has received 1 lakh on 22nd April as advance from Ganesh Floor Mills, a client, for preparation of DPR. So that some report, detailed project report. So it's a service. So for services, GST payable on advances. So when they have received 22nd April itself, they need to pay GST. However, the tax collected on the same from the client has not yet been deposited with the government since 4 months. Amount collected but not paid within 3 months So then there will be penalty under 122 subsection 1. So what default? Collect an amount as tax and not paid within 3 months. So what is the penalty? So 100% of the tax involved or 10,000, whichever is higher. So that will be taken as the penalty. There is one MCQ. The maximum penalty prescribed under 122 for failure of Kolkata office to deposit the tax is 10,000 rupees or tax evaded, whichever is higher. Option D is the answer. Now, two more questions are there. The value of taxable supply received by Mumbai office on which they need to pay tax under reverse charge. Now, go to Mumbai office. Mumbai office, what is inward under RCM? Inward RCM only 2. So, this legal fee 15,000 and this payment made for security service also RCM. So, 15 plus 25, 15,000 plus 25,000. So, that will be 40,000. So, option C is the answer. Then next, the value of taxable outward supply made by Kolkata office on which they need to pay tax under forward charge. Outward under FCM. So what are the outward under FCM? So if you see Kolkata office, so outward is there, but no, the first transaction is inward. For Kolkata office it is inward, but they are asking outward under FCM. So don't take the first transaction. Next, outward RCM don't take. Third, 48,000 outward FCM, 48,000. Then this is outward RCM. Professional fee 80,000, but from 80,000 we need to reduce 15,000 expenditure incurred as a pure agent. So 48,000 plus 80,000 minus 15,000. So why 15,000? Because expenditure incurred as a pure agent needs to be reduced. Then next, outward under RCM, professional fee received for GST or TDS return filing 65,000. So that 65,000 also you need to take. Then next outward, this 50 lakhs is exempted. Then the inward. So only these three numbers. So 48,000 plus 80 minus 15 plus 65,000, that will come to 1,78,000. So option A will be taken as the answer, 1,78,000. So this is the answer for this case scenario 2. Then next one, look into case study 3, case scenario 3. Aspire Solutions Private Limited, hereinafter referred to as Aspire Solutions, is engaged in providing multi-dimensional services. So let's see what are the questions that they are asking for Aspire Solutions. The liability to pay GST for cloud services procured by Aspire Solutions from BizCart. So cloud services means it's a OIDR services. They are asking who is having the liability to pay GST. Aspire Solutions seeks your advice on the taxability of the sitting fee payable to the directors and salary payable to the executive directors. So sitting fee payable to the directors and salary payable to executive directors. What shall be the amount of input tax credit available with Aspire Solution for the month of July, ITZ? Compute the value of outward supply by Aspire Solutions in the month of July and amount of GST to be deposited in cash by the Aspire Solutions. Okay, so we need to analyze again outward supply, inward supply, FCM, RCM and exemption, everything. So first they have got some transactions. So they are registered in Haryana under GST during the month of July. Following transactions were undertaken by Aspire Solutions. So import of certain cloud services, import means inward supply, import of certain cloud services from BizCart. Cloud service means OIDR services for an amount of 50 lakhs. There is an additional charge of 2% as equalization levy. So on such services in India, which is recovered from offshore service supplier by government. So Indian government is collecting it from the service provider outside India, that is BizCart, and BizCart passes on the taxes to its customers by charging them as an internal policy. So therefore this equalization levy is taxes, duties and cess other than GST to be included in the value because it is charged by the supplier to the recipient. So therefore 15(2)(a) will come into the picture and this 2% needs to be included, and import of OIDR services by other than non-taxable online recipient, because Aspire Solution Private Limited, so they are registered. Registered means they will not come under NTOR. Who will come under NTOR? Unregistered person importing OIDR services or registered only for deducting TDS. Here they will not come under that category, so therefore it will be covered under RCM, inward RCM. And there is one question also related to this. The first question is that only, who is having the liability to pay GST and for the cloud services? It is on BizCart. No, it is nil, no. On Biscart, no. It is on as per solutions under reverse charge. And GST we don't have to compute because that is the only option. Suppose if you want to compute GST also, we can do the computation 50 lakhs plus 2%. Why? 50 lakhs is the value plus 2% equalization levy, 51 lakhs. On that 51 lakhs, GST will be payable at 18%, that is given here. So into 18%, that will be 9,18,000 will be taken as the GST liability. And here nowhere we have CGST, SGST, IGST in the options, which means you can compute it together, not at all an issue. 9,18,000 shall be paid by as per solutions. Then B, as per solutions pays sitting fee of 25,000 rupees each to its 4 directors per month. Sitting fees will be supply, so it is not salary, it is supply, and it will be covered under RCM. So this is again they paid, means it's an inward supply, and this inward supply is covered under RCM with respect to the sitting fees. Further, there are 2 directors who are in executive rules and are withdrawing 2 lakh each per month as salary from the company, and TDS is deducted under 192. So this 2 lakhs will be not a supply. Why not a supply? Employee to employer in the course of employment is excluded from supply. Then as per solutions paid for life insurance of its employees in compliance of its internal policy, the total amount of premium paid for 20 employees was rupees 5 lakhs. Okay, so life insurance they paid. So inward supply, it will be coming under FCM because we don't have any exemption and any RCM for life insurance of its employees in compliance of its internal policy. Total amount of premium paid for 20 employees was 5 lakh rupees. And as per solutions provided consultancy services to its client. Provided consultancy services means it's an outward supply. Zoom Corp based in Bengaluru and issued an invoice for 30 lakhs, so outward coming under FCM. Empowering India is a non-government organization located in Haryana. It aims at empowering the eligible companies to grow their business in India. As per solutions, being one of the eligible companies, received a subsidy of 5 lakhs in lump sum. So therefore it is not a consideration. So not included in value. Why it is not included in value? So only if the subsidy is directly linked to price, it should be included in the value. Even though it is from a NGO, it is not directly linked to the price, therefore it will not be included in the value. As per solutions, provided sponsorship services to Mr. X, an individual, for an event organized by it in the state of Haryana, the amount agreed for such sponsorship service is 5 lakhs. So it's an outward supply. So they are providing outputs, sponsorship services, and the recipient is individual. So it will be coming under FCM. It is not for any sporting event. Otherwise, it would have been exempted. All the amounts given above are exclusive of GST unless otherwise provided. There is no other outward and inward transaction apart from the aforesaid transaction in the month of July. The opening balance of input tax credit for the relevant tax period for the company is nil. Subject to the information given above, assume that all other conditions necessary for availing ITC have been fulfilled and the GST rate is given. First question already we have seen. Second question, as per solutions, seek your advice on the taxability of the sitting fee payable to directors and salary payable to the executive directors. The correct advice is, so actually sitting fee payable to the directors and salary payable to the executive directors. So sitting fees is covered under RCM and salary is not a supply. So sitting fee paid to directors is liable to GST under RCM and salary shall not be liable to GST. That itself is a correct answer. Total amount payable to directors is exempt. No. Liable to total amount is liable to GST under RCM. No. Total amount payable to directors is liable to GST under FCM. No. So therefore option A is the answer. Then next one, third question, what shall be the amount of input tax credit available with as per solutions? First you see inward supplies. What are all the inward supplies? First one is an inward supply on which they can take ITC. How much is the ITC? 50 lakhs plus 2% into 18%, 9,18,000. 9,18,000. Then the next transaction is inward RCM. So sitting fees 25,000 into 4 directors on which 18%, 18,000. Don't bother about CGST, SGST because I have not given that in question. So plus 18,000. Then is there anything else? Inward supply. So insurance is a blocked ITC. Insurance is blocked ITC. Life insurance and general insurance is blocked ITC. We cannot take. and but we have some exceptions. If it is under a statutory obligation, so incurred by employer to employee, or inward supply, outward supply, same category, inward supply part of outward supply, it's not given there because it is as per company's internal policy, it's a block credit, we cannot take, and we don't have any other inward supply. So therefore 9,18,000 plus 18,000, so that will come to 9,36,000. Option C is the answer. Then next, so 9,36,000 is the answer. Then compute the value of outward supply made by as per solutions. Outward supply, so value of outward supply, whether it is FCM or RCM, not bothered, value of outward supplies. So what is the value of outward supplies? So only two transactions, that is this 30 lakhs and then this 5 lakhs, 30 lakhs and 5 lakhs, 30 lakhs and 5 lakhs. So that will be 35 lakhs will be taken as the answer. And next, compute the amount of GST to be deposited in cash by as per solution. So what is it? Outward supply 35 lakhs na. On that 35 lakhs, 18%. Check once again. Outward supply FCM both. So 35 lakhs into 18%, that is their gross liability. 35 lakhs into 18% will be 6,30,000. How much is the ITZ? ITZ 9,36,000. So minus ITZ, so 6,30,000 we can use. Now there is some inward supply under RCM. So add inward under RCM. What is the RCM liability? If you see RCM liability, inward RCM, two transactions, that is that sitting fees and that 50 lakhs. So 50 lakhs both, actually both are ITC only. So that is 9,18,000. 9,18,000 is the inward supply under RCM. So therefore the total amount will be 9,18,000 is the GST to be deposited in cash, net liability. So 36,000. How 9,18,000 plus 18? One more transaction is also there, na, sitting fees. So 9,18,000 plus 18, 9,36,000. 9,36,000 will be taken as the answer. Actually nil like that we will think, but it is not nil because GST payable under RCM we have to pay using our cash ledger. So that's the answer for case scenario 3. Look into case scenario 4. ABC Limited is a public sector undertaking engaged in the business of generation of electricity from conventional and non-conventional sources. The Government of India holds 75% equity in the said company and the balance equity is held by institutional and domestic investors. The company has taken separate registration. So basically this is a government company because 75% equity is in this, so it's a PSU. And the company has taken separate registration in the GST in each state where it has business operations. The company has its head office in Delhi and its power plants are located in the states of Bihar, Orissa, Chhattisgarh. Now, if you see the MCQs, what they have asked, the value of taxable supply on which GST payable by Delhi head office. So, Delhi head office under forward charge, what is the value of taxable supply on which GST is payable? Then value of taxable inward supply on which GST is payable under reverse charge by Bihar power plant. Then the value on which TDS under section 51 shall be deducted by Delhi head office while making payment to stationery mart. Yes, basically PSU na. PSU means it will come under notified recipient as per section 51. Whenever you are making supply to this notified recipient, they need to deduct TDS under section 51. Then, so only 3 questions we have in this. So look into the discussion. Following transactions were carried out by the company during the month of February. Particulars: sale of electrical energy to DISCOM. So this is exempted. Why? Transmission and distribution of electricity is exempted. Bank interest received on saving bank account and fixed deposit exempted. So interest on loans, advances, deposits is exempted. House rent recovered from employees unregistered for residential accommodation provided to them. So now if you see, it is recovered from the employees unregistered. It's a house, renting of residential property for residential purpose to an unregistered person is also exempted. This is also exempted. Then next, rent collected from bank, ATM, post office and shops located in the office premises. So this will be outward and this will be coming under, this is services provided by government, not government, PSU. So don't bring it under RCM, so it will be FCM. Sale of iron or metal scrap excluding TCS at 1% as per Income Tax Act, again it is outward, it will come under FCM. Then other income as usual outward FCM balancing figure. Now in addition to the above information, following transactions were also carried out during the month of February. This is also February and additional transactions also for February. A supply order for stationery items was awarded by Delhi head office to Measure Stationery Mart. So this is an inward supply. This is an inward supply, and New Delhi for 3,30,000 including GST 12% in January. So they are purchasing stationery, and this will be inward covered under FCM. The vendor supplied stationery items worth 44,800. Contract is for 3,30,000 including GST at 12%. Vendor supplied stationery worth 44,800 including GST 12% and issued the tax invoice in February. Delhi head office has to make the payment of the said bill in February by crediting the vendor's account for that amount on the same date in its books. The remaining amount was paid in April on supply of balance items. Now, there is one MCQ related to this TDS deduction. The value on which TDS under section 51 shall be deducted by Delhi head office while making payment to Stationery Mart in February. See, first you need to check for applicability of TDS. There is a threshold limit of 2,50,000. The total value of supply under the contract should exceed 2,50,000. If you see here 3,36,000 excluding GST, how much? Excluding GST means into 100 divided by 112. That will be 3 lakhs or more than 2,50,000. More than 2,50,000 means it will be coming under applicability of TDS, but the TDS will be computed on the amount remitted to the person. So what is the amount remitted to the person? 44,800 excluding GST 12%. So excluding GST you take. So 44,800 is including GST into 100 divided by 112, 40,000. On that 40,000 TDS will be computed. So therefore, what is the value on which TDS is computed is 40,000. That is 44,800 into 100 divided by 112. That is 40,000. What about the remaining amount? Remaining amount, as and when they make the payment, at that time only TDS will be deducted. For checking whether TDS is applicable or not, we need to see the contract value. But while computing TDS, we need to take on the value, that is amount credited to the person. Then that is the answer for this. Then next point, second point. Odisha plant purchased office furniture for 2,80,000 during February from an unregistered dealer. So this is an inward furniture they purchased. Rate of GST is 18%, but they purchased from an unregistered dealer. So no GST. So supplier is unregistered, no GST. Sir, RCM 9 subsection 4 not applicable if the supplier is unregistered and the recipient is registered. They need to pay GST under RCM 9 subsection 4 is not applicable for all transactions except promoter or builder. So here it is not applicable, no GST. A board meeting for raising term loan for project expansion was held in February. The Delhi head office paid 20,000 each as sitting fee to 4 independent directors who attended the meeting. So this is an inward supply and it will be coming under RCM, sitting fees. Then for safety and security of his head office and power plants, a company has engaged private security as well as CISF. Following payments were made in February in respect of bills issued in the month of January. So CISF and another security, ABS security services. This ABS security service is inward, but it will not come under RCM. Why it will not come under RCM? See, when the company, supplier is a company, so it will not come under RCM, but CISF, so it will be coming under RCM. So supplier is other than body corporate, Central Industrial Security Force, and the recipient is registered, so it will come under RCM. Then next, the Bihar plant purchased a machinery in February from Sahu Enterprises Patna, not registered under GST for 86,000. Full payment was made in February. Rate of GST on said machinery 18%. All the amounts are exclusive GST. Again, this is inward, but there is no GST. Why no GST? Because that Sahu Enterprises Patna is not registered under GST. Now, so we have got the answer for third question. First question you see, value of taxable supply on which GST is payable by head office under forward charge. So see the outward under FCM. So for Delhi head office, what is the outward under FCM? These 3 transactions, 48,000, but here we don't have anything, 2,50,000. And anything outward, no. So only 2. So 48 and 2,50,000. 48,000 plus 2,50,000. Anything else? No. Electricity will not be coming and bank interest is exempted, house rent is exempted, we don't have any other transaction. So 48 plus 2,50,000, 2,98,000. So option B is the answer. Then value of taxable inward supply on which GST payable under reverse charge by Bihar power plant. Only see Bihar power plant. Bihar power plant alone you see. Inward RCM, we don't have anything here. Next, so this is Delhi head office, this is Odisha, and board meeting was held, that is also not related to Bihar, and Bihar plant inward RCM 10 lakhs. So 10 lakhs on which they need to pay, then anything else. So Bihar power plant purchase machinery, but there is no GST on that. So only 10 lakhs. The 10 lakhs also is what? So that is with respect to that security agency services. So that will only be taken. So this is the answer. So for these 3 questions, but actually question is big. They could have asked more questions also based on this, like compute the net GST payable, etc. and all. But this much only they have asked in this case scenario 4. Now we are moving on to case scenario 5. Case scenario 5 is a little complicated. Supernova India Limited is a 100% subsidiary of Supernova LLC Japan. So Supernova LLC Japan is the holding company. Supernova LLC Japan is the holding company. Okay. Below that there is Supernova India Limited, 100% subsidiary, registered in GST in the state of Gujarat. Supernova Incorporation Singapore is another subsidiary of Supernova LLC Japan and is registered and is engaged in supply of industrial goods to customers across the world. So the Supernova LLC Japan is having 2 subsidiary companies, Supernova India, so this is in Gujarat, correct, Gujarat, and Supernova Incorporation Singapore, Supernova Incorporation Singapore. So this is another company. And then in India, Supernova Incorporation Singapore sells goods to subcontractor registered under GST in the name of Alpha Limited in the state of Maharashtra. So Supernova is selling to Alpha Limited, and where is that Alpha Limited located? In Maharashtra. Okay, they are making sale of goods. Alpha Limited imports the goods sold by Supernova Incorporation Singapore and carries out the required technical process on such goods in the factory located in Maharashtra. So Alpha Limited is importing goods, import of goods. After import of goods, what Alpha Limited is going to do? Alpha Limited, after processing the goods by Alpha Limited, the goods are sold by Alpha Limited to Supernova Limited for further sales to end customers. So Alpha Limited will make sales to sale of goods to Supernova India Gujarat. Again, Supernova India Gujarat is making sale to customers. Sale to customers. Okay, this is what they have given. Then as a holding company, Supernova LLC recovers an amount equivalent to 20% of the sales made by Supernova India Limited as commission on monthly basis. So on this sales, 20% of sales as commission, 20% of sales will be payable as commission to Supernova LLC Japan. So which means this will be coming under like import of services to Supernova India Limited. They are paying commission now, so means it's an import of service to Supernova India Limited, and Supernova Incorporation Singapore is selling goods, so Alpha Limited is importing the goods. So this is the structure of the transactions. Now they gave the details of the transactions. Below that we will see what are the MCQs. Total GST liability net of input tax credit, if any, of Alpha Limited for the month of January is. So total liability net of input tax credit. What shall be the gross IGST liability of Supernova India Limited? First one they are asking about Alpha Limited, then Supernova India Limited for January. How shall the amount paid towards the training expense of employees of finance team of Supernova India Limited be treated under GST law? So there is some training expenses incurred. Whether input tax credit is available on the GST paid by Supernova India Limited on the invoice amounting to 1 lakh to the hotel located in Mumbai. So Supernova India Limited is making some payment to a hotel located in India, Mumbai, Maharashtra for stay of the employee. So how much ITC is available is the question. whether GST is applicable on the event organized by Fun Events Limited for Supernova India Limited in Mauritius, and what is the place of supply in that case. So let's see the transactions now one by one. During the month of January, Alpha Limited imported goods worth rupees 10 lakhs from Supernova Incorporation Singapore. So Alpha Limited imported goods worth 10 lakhs from Supernova Incorporation, and the interstate purchase of Alpha Limited from domestic market amounted to 2 lakhs during the month of January. Plus Alpha Limited is also making purchases. So what is that purchases in India that is made? 2 lakhs. So 2 lakhs is the value of purchases made by Alpha Limited. Using this 12 lakhs purchases, they made the processed goods and sold by Alpha Limited to Supernova Limited amounted to 10 lakhs. So the transaction value of these goods is 10 lakhs. So they are selling 10 lakhs worth of goods to Supernova India Limited. Further, Supernova India Limited paid an additional amount equal to 20 lakhs for transportation and handling of goods to third party, a goods transporter, which was contractually agreed to be paid by Alpha Limited. So any amount that the supplier, in this case Alpha Limited is a supplier, Supernova India Limited is a recipient, any amount that the supplier is liable to pay but which is paid by the recipient should be included in the value. So 2 lakhs also including the value as per 15(2)(b), it is to be included in the value. Then Alpha Limited has also charged an amount equivalent to 12,000 on such processed goods as municipal levy 15(2)(a), any taxes, duties and cess by whatever name called other than GST. So 12,000 as per 15(2)(a), it should be included in the value. Then Supernova India Limited sold the goods purchased from Alpha Limited in the month of January as per the details provided below. 6 lakhs to a customer located in Rajasthan and 8 lakhs to a customer located in Gujarat. So they are making sales to customers. So Rajasthan and Gujarat. So Rajasthan, how much sales? 6 lakhs and 8 lakhs. 6 lakh sales in Rajasthan and 8 lakh sales in Gujarat. So Rajasthan sales will be interstate, Gujarat sales will be intrastate. Okay. There is no opening stock and closing stock for the month of January with Supernova. As they are making sales, how much is the sales made by Supernova India to customers? So 6 lakhs plus 8 lakhs, which means 14 lakhs, and out of this 14 lakhs, 20%, what is 20%? 2,80,000 is paid as commission to Supernova LLC Japan. Now there is no opening stock and closing stock for the month of January. So now there is some other transactions. In February, Supernova India Limited sent Supernova India Limited sent 5 of its employees of finance team to Singapore for training purpose. The training was given by Supernova Incorporation Singapore at its office located in Singapore. The expenses related to such training was paid by Supernova India Limited Singapore to Singapore Incorporation Singapore. Now, this is a training and performance appraisal services. For training and performance appraisal services, whether it is section 12 or 13, we need to see. So it is section 13. How section 13? Who is the supplier? Who is providing training? So training is provided by Supernova Incorporation Singapore, supplier outside India, and recipient Supernova India Limited India. So section 13, as per section 13, place of supply will be location where service are actually performed, where the service is performed. So they have sent to Singapore for training. So Singapore will be taken as the place of supply. So where is the supplier? Singapore. What is the place of supply? Singapore. Therefore there is no GST in this case. That is one MCQ. If you see, how shall the amount paid towards training expense of employees of finance team of Supernova Incorporation be treated? No GST is applicable on the transaction since training was imported in Singapore, place outside India. Correct. GST is applicable? No. Supernova Incorporation Singapore is required to obtain registration? No. Is required to obtain registration as YDR? No. So here in this case, location of supplier and place of supply in Singapore. So therefore no GST. There is no GST on this transaction. That is the answer. The next one, and here we don't have any GST, so we don't have to bother about the liability. Further, an employee of Supernova India Limited has visited the manufacturing unit of Alpha Limited in Mumbai, Maharashtra, and had stayed in the hotel located in Mumbai, Maharashtra in the month of February. At the time of checkout from hotel, the invoice was issued for an amount equivalent to 1 lakh. The hotel has issued invoice in the name of Supernova India Limited, inward supply for Supernova India Limited, and GST charged at the rate of 14% by the hotel. Where is the hotel located? Hotel is in Mumbai. Where is Supernova India located? Gujarat. So now on the invoice amount of 1 lakh, out of such amount, the amount recoverable from employee towards non-official stay was 50,000. So this is inward, covered under FCM, but no ITC. Why no ITC? So where is the Supernova India located? Gujarat. But they paid the hotel accommodation outside the state. So CGST, SGST paid in the other state cannot be taken as ITC. So no ITC in this case. And we have a MCQ related to that. Whether input tax credit is available on the GST paid by Supernova India Limited on the invoice amounting to 1 lakh to hotel located in Mumbai, Maharashtra for stay of the employee. If yes, please specify the amount of the input tax credit available. Input tax credit not available. CGST and SGST paid in another state. Paid in another state cannot be availed as ITC. Cannot be availed as input tax credit. Okay. So that is the answer for this. Then next one, Fun Events Limited, an event management company located and registered at New Delhi, had organized a cultural event in the month of February for Supernova India Limited in Mauritius. The opening balance of the input tax credit of both Alpha Limited as well as Supernova India Limited for the relevant tax periods is nil. Further, there is no other inward and outward supply transaction for Alpha Limited in January and February apart from the aforementioned transactions. Subject to the information given above, assume that all other conditions necessary for availing ITC have been fulfilled. So, Fun Events Event Management Company, where is it located? New Delhi, had organized a cultural event for Supernova India Limited in Mauritius. Okay. So, Event Management Company located in India, Supernova India Limited, India. So, where the event is held outside India and it is organizing an event. For organizing an event, what will be taken as a place of supply? B2B location of event, B2C. So, we will be taking it as like B2B location of recipient, B2C location of event. If the event is outside India, location of recipient. Now, they have asked one question related to this. Whether GST is applicable on the event organized by Fun Events Limited for Supernova India Limited. Location of supplier. Where is the Fun Events located? Fun Events is located in New Delhi. Fun Events is located in New Delhi. And where is Supernova located? Location of recipient? Gujarat. What will be the place of supply under section 12? Gujarat. So therefore, in this case, the place of supply is Gujarat and GST will be applicable. Okay. So that is the answer for the 5th MCQ. So then first and second is only left and all other conditions for availing ITC have been fulfilled. CGST, SGST, IGST is given and the rate of basic customs duty on import of goods is nil. So they have given because we are importing some goods now. However, IGST is applicable on import of goods, no additional duty or cess is applicable on import of goods or services. Now, what is the total GST liability net of ITC of Alpha Limited for the month of January? First, you take Alpha Limited. Alpha Limited is making purchases. They are importing goods 10 lakhs and they are making purchases 12 lakhs. On this, IGST paid can be taken as credit. What is their outward supply? Their outward supply is 10 lakhs plus 2 lakhs plus 12,000. So 12 lakh 12,000 is their outward supply. Now see here. So first gross liability, if you see gross GST 12 lakh 12,000 and we have IGST, CGST, SGST. So be careful. So where is Alpha Limited located? Maharashtra, Gujarat. So IGST. So gross liability will be IGST. How much? 12 lakh 12,000 into, so 18%. 12 lakh 12,000 into 18% will be coming to 2 lakh 18,160. This is gross liability minus ITC. What is their inward supplies? So they are making an inward supplies of 12 lakhs. That is also IGST. 12 lakhs into 18%. So 12 lakhs into 18% will be 2,16,000. So 2,18,160 minus 2,16,000 will be coming to 2,160. So 2,160 is the IGST liability. So we don't have any other inward supplies, etc. For Alpha Limited, whatever is there that we have already written. Sir, what about this 1 lakh? They cannot take ITs. That is for Supernova. For Alpha, we don't have anything. So these are the transactions for Alpha Limited. The answer is over. Second, what will be the gross IGST liability without any adjustment of input tax credit, if any, for Supernova India Limited for the month of January? So January, like Supernova India Limited is making sales na. They are asking only IGST. IGST means Rajasthan. Rajasthan 6 lakhs into 18%, 1,08,000. 1,08,000. 1,08,000 sales in Rajasthan. They are asking only IGST liability. Plus, they are importing some services. Commission they pay na 20%, 2,80,000. On the 2,80,000, they need to pay GST and RCM because they are remitting the commission into 18%, that is 50,400. So import of services, import of service 50,400. Now what is the total? 1,58,400. Option C is the answer. Usually this import of service point we will miss. So on import of service they need to pay GST. So they are asking what is the gross IGST. They did not ask FCM or RCM. It is FCM and it is RCM, but that will come under their gross IGST liability. So 1,58,400 is the answer for this. So look into case study 6, that is case scenario 6. So this case scenario 6 is related to the registration. So let's see what are the questions that are involved. The value of outward supply on which tax is payable by Mr. Ashok for the current financial year. So outward supply on which tax is payable. Which of the following statement is correct in terms of facts of the given scenario? So that is based on reading only we will know. The value of supply on which Mr. Ashok is liable to pay GST under RCM for the current financial year. Which of the following inward supply is not subject to payment of tax under RCM? Then whether input tax credit is available on GST paid by Ashok on the taxable value of 1 lakh charged by Hotel Blue Pines located in Maharashtra. If yes, please specify the amount of ITC available. So if you see here, so this question, Mr. Ashok is proprietor of Messrs. Office Line Enterprises, is engaged in trading of office stationery items in its stationery store located at Salt Lake City, Kolkata. The said store is taken on lease from Kolkata Municipal Corporation. So Kolkata Municipal Corporation is government providing immobile property on rent to a business entity. If the business entity is registered, then it will come under RCM, otherwise it will be FCM. During the previous financial year, the turnover of Messrs. Office Line Enterprises was 14 lakhs, means not exceeding the threshold limit. Mr. Ashok supplies goods within the state of West Bengal only, so they are making only intrastate supplies, but purchases stationery items mostly from Delhi and Mumbai. So they can have interstate purchases. Just because a person is having interstate purchases, they are not compulsorily required to get registered. He owns a duplex house in New Town, Kolkata. He stays in the ground floor and has let out the first floor to an employee of IDIC bank registered in Delhi for residential purpose. So renting of residential property for residential purpose. The rent for the same is paid by IDIC bank to Mr. Ashok. Now here you should be understanding who is the recipient. So recipient is a person who is liable to pay the consideration, not one who is paying the consideration. Even though in this case IDICI bank is paying the consideration, they are not recipient. The one who is liable to pay consideration is the tenant. Who is the tenant? Employee. So actually this transaction will be coming under exempted. Why this will be coming under exempted? Renting of residential property for residential purpose to an unregistered individual, it will be exempted. Okay. And even if it is registered individual also, for family stay it will be exempted. So therefore it is exempted, and who will be treated as recipient? Not this IDICI bank, it will be that employee of that bank will be treated as the recipient. Then during the current financial year, he applied for GST registration on voluntary basis on 2nd April 2023, and the registration was granted on 9th April 2023. So he voluntarily got registered. When he voluntarily got registered, he is liable to pay GST on outward supply from the date he got the registration. So when he got registration 9th April, so from 9th April only whatever is the outward supplies on which Mr. Ashok is liable to pay GST. Also, as per 18(1)(b), Mr. Ashok can avail ITC on the closing stock as on 8th April 2023. The details of his stock position during the current financial year is 2nd April irrelevant. So, he need to take ITC with respect to the stock as on 8th April. Of his stationery items purchased from a registered dealer 1 lakh, books, periodicals, journals, maps, etc. 0.30 lakhs. So, only as on 8th April whatever is the closing stock that he can take as ITC. The details of transactions carried out by Ashok during the current financial year is as furnished here. So, 9th April onwards only his outward supplies is chargeable to GST. Up to 9th April no GST on his outward supplies. Sale of office stationery, so it is an outward, and intra-state supply to registered person. Sale of office stationery outward, and it will come under FCM. Intra-state supply to unregistered person. Legal fees paid to advocate. So, advocate services provided to Mr. Ashok. Mr. Ashok's turnover during the previous year does not exceed threshold limit. Therefore, these advocate services will be exempted. So, we have now services provided by individual advocate or firm of advocate to a business entity whose turnover during the previous year does not exceed the threshold limit for registration is exempted. So, due to that reason this legal fees paid to advocate will be exempted. Then purchase of stationery items, this is inward, intrastate received from a registered person, inward FCM. Purchase of furniture for use in office, inward. Purchased from an unregistered person, no GST. There is no GST because it is purchased from an unregistered dealer. Purchase of stationery items from registered dealer of Delhi, again it is inward, and on which so GST is payable under FCM. Lease rent of stationery store paid to Kolkata Municipal Corporation. So, this is inward, and this will come under RCM because now he got registered na. When he got registered, it will be coming under RCM. Transportation charges, because services provided by government to business entity, so registered business entity will come under RCM. Transportation charges paid to Gati transporters, a GTA who has not exercised the option to pay tax itself. Means again GTA service they have not exercised the option to pay GST under FCM, means it will come under RCM. Interest paid on borrowings from BBI bank exempted. Why it is exempted? Interest on loans, advances, deposits exempted. Accrued interest on fixed deposit with BBI bank exempted. Rent received from IDI bank for its employee exempted. So, this is exempted. Already we discussed IDI bank is not the recipient, it will be the employee who is recipient, therefore it is exempted. Now, Mr. Ashok went to Mumbai, Maharashtra for a business meeting in February 2023 and stayed in Hotel Blue Pines. Where is Ashok actually registered? Ashok is getting registered on voluntary basis. Where is he located? Engaged in trading of office stationery in Kolkata. Okay. But where he is going to? He is going to stay in a hotel. So, in Maharashtra, he cannot take ITC. Why he cannot take ITC? Same, already we have seen in the previous case scenario. CGST, SGST paid in the other state cannot be taken as ITC. Hotel charged 1 lakh for the stay. All amounts given are exclusive of GST. This is an inward, and this will come under FCM, but they cannot take ITC. No ITC with respect to this. And no other inward and outward supply, and all the conditions for availment of ITC is fulfilled and rates is given. Now, first, what is the value of outward supply on which GST payable by Ashok? Outward FCM 84 lakhs plus next one 14 lakhs, okay, plus then next one outward, you see we don't have any other outward, so 98 lakhs. What are the first two? 84 and 14, 84 lakhs and 14 lakhs, 98 lakhs. So, only from 9th April he is liable to pay GST na, so 98 lakhs. Which of the following statement is incorrect? Is correct in terms of facts of the case scenario given above. Mr. Ashok cannot opt to pay tax under composition scheme. Incorrect. They can opt for composition scheme because they are registering only this year. Definitely previous year does not exceed 150 or 75 lakhs. So Mr. Ashok can opt for composition scheme, and moreover they are not making interstate supplies. Interstate purchases can be there. Mr. Ashok is entitled to take ITC of inputs held in stock as on 1st April. Incorrect. Only on 9th April. Mr. Ashok shall be liable to pay GST under RCM under 9(4) for purchases made from unregistered person. No, at present 9(4) is not applicable for any transaction except promoter or builder. So this is also incorrect. Mr. Ashok is entitled to take ITC on the inputs held in stock on 8th April 2023. Correct. So therefore option D is the correct answer. The value of supply on which Ashok is liable to pay GST under RCM for the current financial year. So what are the inward under RCM? Inward under RCM only these two, 1.2 and 1.5. 1,20,000 and 1,50,000. So that will come to 2,70,000. So option D is the answer. Which of the following inward supply is not subject to payment of tax under reverse charge mechanism? Shop rent paid to KMC is actually RCM. So it is RCM. Shop rent paid to KMC is RCM. But legal fees to advocate is exempt. So not subject to RCM. Purchase of stationery from unregistered, no GST. Transportation charges RCM. They are asking which is not subject to RCM. 2 and 3, option C is the answer. 5. Whether input tax credit is available on GST paid by Ashok on the taxable value of 1 lakh charged by Hotel Blue Pines. No, they cannot take ITC na, because CGST, SGST paid in the another state cannot be taken as ITC. Okay, that is with respect to this. And there are 2 more case studies, 7 and 8, that you try for practice. So you can try these 2 for practice. And these are the various ICAI MCQs that is given in Board of Studies portal. And so in the next video, I will be sharing with you the Mighty 50 discussion. Thank you.